Let's start with this one. Andy McCullough, Stephen Nesbitt, Grant Brisby putting this together on The Athletic. And we're going to show you the big board. Winners first. Red Sox and Cubs right up there. Those were the two that you and Kratz brought up right away when we got to the end of the trade deadline show on Monday. The Angels are listed here for trading some pieces. Why wouldn't they be winners? I just saw your face smirk a little bit. You have to consider the context.
No. I'm not smirking at all.
You're okay with this.
I was just thinking, like, Kratz, I also said the Cubs and the Red Sox were big winners. So I
said you and Kratz.
I'm like,
no, I said you and Kratz at the end of the show.
Did you forget what I said, Scott?
I didn't. I never forget about you. You're sitting too close to me for me to forget. Boston and Chicago, the Cubs, winners, along with the Angels. The Dodgers, of course, with Skubal. The Phillies filled needs in the bullpen and with Luis Arraez.
Yeah.
It wasn't as conventional as what we thought they were going to do, but it was a thing.
A lot of commodities are going to go through the roof, and it will be inflation hedges. I think gold's going to 20,000. I think silver's going to 500 when oil goes to 500. But home prices, I think, could drop as much as 30 to 40% in the bust. And I don't think they're going to be inflation hedges in the next cycle. Why? Because mortgage rates are going to be high double digit. How in the heck are we going to see people afford a mortgage payment if they've got a 15% mortgage? So the inverse of rising mortgage rate is a falling home price, right? So there'll be periods coming out of the bus with all that money created, but you'll have some bounces in that real estate. But I believe real estate, probably more so in Canada than here, even because you guys have had such a big run. But I believe real estate is peaking, has peaked as we, at least in this country, it's already peaked. We could have a bounce as rates come down this summer, but I don't think you're going to get past the peak. A lot of commodities are going to go through the roof, and it will be inflation hedges. I think gold's going to 20,000. I think silver's going to 500 when oil goes to 500. But home prices, I think, could drop as much as 30 to 40% in the bond.
Padres picked up two starters. I think that was huge. Casey Mize and Robbie Ray.
All right, Alexander, let's talk about what is happening in Japan with the yen. The U.S. Central Bank, Besant.
All right. Enough of that. Hey, Ricky's the only person here, but we are now at 23,742,521 shares. 23,742,521 shares of Railtown. That is amazing what you guys are doing. Well, I'll try to talk about the yen because Steve asked about it. I think I pretty much got the answer I wanted to say the other day, but the one thing about it is I think they're trying to protect our bond market. There's a lot of uncertainty. So nobody really knows what happens, but when you start a war of choice in, I guess you can call it West Asia, but the Middle East, it's out of control. Maybe it's not as out of control as it can yet get, but it brings a lot of uncertainty. And uncertainty is the one thing the bond markets don't like. Stock markets don't much like it either, but bond markets don't. I'm sorry I'm a little late. I've been working hard, or hardly working. You guys probably think, but I have been. I'm going to try to go over things in I don't know about rapid fire, but I'm going to try to hit a lot of, it's going to be a potpourri of topics today. But we'll lead off with Railtown. There's nothing new to say about Railtown. But that doesn't mean that my enthusiasm and my belief in the power of Railtown has diminished. We just have to get through August. Now, that doesn't mean it won't go up in August. Railtown could very well. To me, Railtown is behaving as if there's a bidder. That's a subjective thing. I don't know if it's true. But let's go through the prices. This is what I have on my list. There's one I can't mention because I was asked not to, but it hasn't dropped off. Don't worry about it. It was a loser, big loser. So far, it might still win. Next strip is 175, up 4 cents. Finger motion is up 4 cents, 0.0408 at 25.18. And Railtown is up 0.0074 at 24.02. And then Nixie is 0.5838. And the total metals is so cheap, but the spread is wide. And that's the illiquidity of it. But the ask is 1771. The bid is 1361. I want to talk about total metals. And sorry, I'm raising my voice. Let me see if I can turn down the air conditioner. I'm trying to talk over that sound, and then I raise my voice. I'm having all sorts of problems. I don't know what it is. I think Apple made a deal with Google. So all the research that I wanted to show you on total metals, I'm going to have to start over again. But we'll go over total metals here today. It's one of my commitments to re-up your interest in total metals. Right now, the ask is 14 cents. Total metals, TTMF, it's 0.143. That, to me, is a screaming buy. There's one level of risk that I want to get. I was supposed to have an interview. I'm going to try to get that this week or next week. Is when do they need financing? My understanding is they have all the money they need to execute this summer's drilling program. But it got delayed by fire. All those Canadian fires. It was right in the heart of that. Luckily, they hadn't deployed their troops, so to speak, so they aren't spending money. But when they start that, it's 2 or 3 weeks till results. Best case. And nothing ever happens best case, but it's not very long. So that is a screaming buy at 14 cents. And then let's see what else is there to even look at. I don't know. Do you want to see ZJYL, GDC? COSM, who cares about that? I don't know. None of them are worth knowing. I guess we could look at Energy Vault. Energy Vault's 325, up 20 cents. So let's get back to the title of this little event. Finger motion right now is bidding 25.36. This increase in price is not, I repeat, it is not because anything good is going on at Finger. Finger simply will not be able to pull itself out of the note they signed for shareholders. They might pull it out for the entity, for the company, and for the board, and for the employees and the officers for a while. But this bounce in finger gives you a chance to sell finger. Don't delay. Act. Sell finger and buy Railtown. Railtown, it's very rare that you can take such huge punishing losses in a stock and sitting right next to it for the same amount of shares is a stock that has also had its price heavily suppressed. Although, you know, you can make arguments that, well, we don't see any revenue yet. You can make those arguments. But there's a stock right there that can take your money higher than any number you paid for finger, including $17. Railtown will recover your money that you lost in finger, and much more. Most of you probably paid $5, $6, $7, $8 for finger, and you're holding on because it was going to be life-changing. Well, it was life-changing. But now you have a chance to take your losses, which are valuable at 25 cents, and you can go buy Railtown all that you want. Why? Because the machines are giving it to you at 24.5 cents. Go do it. One for one. Out, take your losses in finger. Grab Railtown like the lifeline it is. Don't go down in the waters of the Titanic. Get up on whatever ship came the next morning and took everybody to Europe or to New York. Save your account. Do not have misplaced loyalty. Do not believe that any of, and this is my opinion, of course, but don't believe anything you hear about the upside in finger. You've given finger 5 years of your financial life. It's time to cut. I say this with no animus to anybody involved with finger. I say it because with urgency, because you can get out of finger one for one and get into Railtown, and Railtown's next stop is $2.50. The stop after that is $5. The stop after that is $7.50. The stop after that is $10. The stop after that is $12.50. The stop after that is $15. The stop after that is $17.50. The stop after that is $20. The stop after that is $22.50. The stop after that is $25. The stop after that is $27.50. And that's if you take the local. It might be, you don't know, you might be getting on the express train and the next stop might be $5.50, $8, $12.50, $25, $35. You don't know, but you're not getting out of the juncture in Railtown. You're not getting out. Swap, switch. Sorry. You're not getting out with finger. You are getting out with Railtown. Switch, finger, get out of finger. Establish your losses. Buy Railtown one for one. All right. I don't know if I can, I don't know if I can make it any plainer, make it any clearer, but it's my strongest recommendation. It's opinion only, that anyone here who's gone through the ups and downs and the holding on for the promise of finger, even if you don't fully understand the story of Railtown, sell your finger, buy Railtown. If we are lucky, you still have a day or two to do it, but you can do it one for one, and it's your last chance to do that, in my judgment. So anyway, that's my strongest idea today. Swap Finger, get out of Finger and buy Railtown. Okay, let's move on. I want to talk to each of you who invested in the gold company. Things are, as I sensed, things are going to go forward differently, but I think they're very good. And I think because of investors that I have brought, I think that I'm going to be able to make sure that anyone here who wants to is going to be able to fully participate and experience the upside, which could be quite large and quite sustainable. I don't want to talk about it anymore over the the air here, but I think what I'll do is either write everyone, if I have your number, if I have your email, I'll try to talk to each of you, possibly with the one exception of that arrogant guy who calls on behalf of all of us to the company. But I'll try to reach him, but he's quite arrogant. I do have someone that would, I offered it to him. I had someone that would buy his position out, and he declined to take it. So as far as I'm concerned, he wanted to stay in. But it's my job to speak to everyone, so I'll talk to him. If it works, it's going to involve some trips on my part, and I'm working on trying to raise some money that allows me to do that, and I'll tell you about that if that happens. That'll be, I would tell you anyway, but if as soon as money comes in, I'll let you know what I'm doing. I'm excited about it. I think it's going to be great, but things are in motion, so that you got to be paying attention. You got to act. I wish my investor, and I consider him a friend, who originally wanted to come in, had been able to do it, but we have to adapt. We have to adapt. Okay, so I talked about that briefly. I don't want to say any more. Yeah. I want to play something for you I haven't listened to. It's very short, and it's the interviewer is a woman, just to show that I'm not a Neanderthal. The mayor said something about getting rid of all the Neanderthals in the department and bringing the department into line with modern day thinking. I'm just wondering if anyone here knows what law is being violated. Perhaps you'll tell us about your best felony arrest. I've never had a felony arrest. Well, then maybe you'll tell us about your best misdemeanor arrest. There's men out there that have been humping their backs for years, and why are you getting... Yeah, but out there, you're saying that you don't want women should be tied to the stove or whatever it is. Yeah, but when you're out there, you're somebody's partner. And you're liable to get your ass killed. Well, it's my ass. Everyone laughs. Well, that's a hell of a price to pay for being stylish. Anyway, I want to show it to you because it fits in with the mining area in particular. My theme of commodities are the future. The world is going to change in front of your eyes. We're going to be in front of it. And I think AI is a big part of that change, by the way. But this is a man that I met in Toronto for a gold company that I raised about $5 million for. And I briefly, supposedly was the CEO of it, but turned out that the verbal of the guy that's still the CEO wasn't very good. All right, here we go.
Hello, everybody, and welcome to this very special episode of Prince Sites Global Spotlight, where I am here with the Rick Rule of the Rick Rule Symposium and so many other things in Boca Raton 2026. Rick, this is the best conference ever. I say this every year. We were just talking offline about the community here and why that's important.
Well, the goal to me has always been community. For about 30 years, I put on a conference. I think we're getting to the point now where we have a community, the integration of the conference with the classroom, where we teach people how to interrogate companies and how to make themselves better investors. And the fact that we interview all the exhibitors before the conference so that the attendees arrive able to ask intelligent questions as opposed to questions. And frankly, the continuity of speakers that we have.
He's a bit full of himself, but he's a good guy.
Shape the paradigm of our attendees, not from the point of view of journalists, but rather from the point of view of participants, has all conspired, if that's the right phrase, to create a conference that's perhaps more than a conference. We have attendees now who have met here 3 years ago.
All right, get on with it.
We have attendees also who recognize that not all of the audience in the room, not all of the knowledge in the room, and that what you say is very true.
And it does resonate throughout, just
Instructional programming at the room.
that you're most interesting. Have you learned anything, or is there anything you want to explore that has come up here before this conference?
I don't learn at the conference, sadly, because I'm so damned busy. I have to play the recordings afterwards in order to attend my own conference. I think in terms of the community that we're trying to just understand that. Next year, I suspect I'm going to have Joel back, and I suspect...
All right, boring. Let's try this one.
The universe of silver stocks that are in my portfolio seem to be, from my point of view, at least discounting $37 to $42 silver in a $55 world. That's not an unattractive scenario to me. The deterioration in purchasing power for the US dollar will lead to the generalist investor coming back into the precious metal space. History teaches us that when that happens, silver begins to outpace gold. Should this circumstance come to pass, I suspect I'll be ludicrously rewarded. Agnico, Franco, and Wheaton have been crushed, which I think for most investors is a gift from God, because we are, with regards to mining stocks, in a risk-off environment. I've chosen to take more risk in my portfolio.
You're making a speculation on the expectation of potential future cash flows. How do you navigate through all that and separate the wheat from the chaff? Rick Rule, great to have you back on Commodity Culture. Now, it certainly is interesting times in financial markets and the commodities sector as well. I want to kick the conversation off with silver, because you've said you love to buy things that are hated. You sold a lot of your physical silver in the run-up to triple digits to all-time highs. You rotated some of that into silver miners, which I want to get to later. But at these prices and with sentiment so low, are you looking at silver bullion as a potential buy again here?
No. In my speculative portfolios, I mean, the easy money's made on hate, and silver isn't hated. Some people who paid too much for it in January hate it, but the market as a whole doesn't hate it. When you and I first started talking, Jesse, I don't know, 5 or 6 years ago, both for your own channel and for VRIC. Silver was legitimately hated. The stuff was trading for about $20 an ounce. The youngsters who hurt themselves in the so-called silver squeeze were vituperative in their hatred for silver. You could look at any sort of social media discussion group, and if there were 20 comments about silver, 18 were people who were describing it as a four-letter word. That was hate. In commodity markets, buying hate and being patient is the surest way to make a fortune. Silver isn't hated yet, it's disappointed, but there's still hope in the market. I look for a market where the people who were hopeful now despise the sector. And we're not even close to there with silver yet.
I want to talk about silver miners because I know you're bullish there. We've obviously seen that sector in a downward trajectory recently, perhaps no surprise given what the price of the metal has been doing since hitting all-time highs earlier this year. Do you see silver mining stocks as on sale right now? And what are your overall thoughts on where you see the miners headed over a multi-year time frame?
I don't see them on sale. I don't see capitulation bargains, but I see some stocks that are arithmetically attractive, which is to say, I see companies that are selling at discounts to my calculation of their net asset values, where they have sufficient development pipelines and they're generating sufficient cash that their net asset value will increase over the 3 to 5 year time frame without any help from the silver price. The universe of silver stocks that are in my portfolio seem to be, from my point of view at least, discounting $37 to $42 silver in a $55 world. That's not an unattractive scenario to me. I believe that renewed momentum in silver will occur as a consequence of renewed momentum in gold first. In other words, I don't think that silver will be the first mover. I believe that the deterioration in purchasing power for the US dollar will lead to the generalist investor coming back into the precious metal space. And when the generalist investor does, history teaches us that when that happens, silver begins to outpace gold. So I'm not looking for this to happen anytime soon. But I also know that the silver stocks are one of the most volatile classes of stock on the planet. And should this circumstance come to pass, and I believe there's a probability that it will, I suspect I'll be ludicrously rewarded in a fairly short period of time, but that fairly short period of time may not happen for 2 or 3 years, which I'm comfortable with.
In terms of silver itself, then, do you think we could see further downside up ahead? Obviously, predicting prices is a mug's game, and I know you're a very long-term time horizon investor, which is why I love talking to you, because in my opinion, short-term price action is for entertainment purposes only. We're invested in silver, for example, in silver miners, because we see a long-term thesis playing out eventually. But in the near term, do you think we could get back to that $30 level in silver? And at that point, would you be stepping in to buy?
You know, if you give me the use of the word could, I can tell you anything, Jesse. I believe that in the very near term, the U.S. Fed has lost control of the long interest rate, the 10-year and the 30-year rate. I think they'd like it lower, but I don't think there's much they can do about it. They can still control the short rate, but it looks like they've lost the long rate. If long bond rates continue higher, I think that's tough on precious metals prices. So it wouldn't surprise me that the balance of 2026 continues the trend in motion, which is to say lower. Paradoxically, I hope that's true. Although I have a portfolio that has a lot of physical gold and an awful lot of precious metals mining stocks, I believe the next 5 to 10 years will be extraordinarily good for that sector, and I want to buy more. Given the fact that I want to buy more, it's in my interest to have that stuff cheaper, not more expensive.
All right.
It's wild.
I'm uncomfortable playing that much longer without his permission. But you heard some things there that I think we've all learned together. You value a company, you come up with its projections, and when it's on sale, when it's hated, that's when you buy it. You can apply that to Railtown right now. But I think this applies to total metals as well. When mining stocks fall out of, the hot money, the momentum play, and people they just turn away, that's when you buy them. And that's where total metals is right now. I'm not going to go into total metals further at this moment because I want to get on to what I prepared for you and also go on with your comments. But what Rick Rule, again, who I met and spent quite a bit of time with at his own courtesy, but a very good friend of mine arranged the meeting. And I met him in Toronto. He's very good. And I think what you hear there from him, gold is going to lead us out of here. The dollar's in trouble. These are things you read about now in the headlines. It used to be something that people didn't understand. Now everybody does. But I like hearing that he thinks there can be some weakness as interest rates go up, which is why I think the United States intervened in the yen markets, is because our bond markets are starting to show stress. They don't know what oil prices are going to be. They don't know what inflation's going to be. They don't know if we're in war. They're seeing in front of their eyes that the technology of war is changing hands, and that possibly the dollar will not be defended by oil prices anymore, by being the vehicle to price oil. So there's a lot of uncertainty, and if interest rates go up, which I'm actually not so sure they're going to stay up, but if they do go up, I think we're probably in for a really scary time. I don't know if it's this year, next year, a year after, but once it starts, those who aren't prepared, I think we're in for something as generational as what happened during the Great Depression. It'll be different. Everything's different. And that means depression means, I suppose you could have high real rates, but depression means falling asset prices and underutilized assets, underutilized money. So I'm personally, call me 50-50 on higher interest rates. But right now the bond market is showing higher rates. Mortgages are up. And it's kind of interesting. We might have time here to see our position in Railtown rally such that we can make allocations here. Now, the reason I did bring that up is I do want you to realize that total metals being down, again, the price isn't telling you anything, but that's when to buy the stock. You can buy it now at 14 cents. You can buy it now at 14 cents. And the drilling program, which has been slowed down because of the fires, will start. They're not spending any money until they start it. So you buy it at, I don't know, 14 cents, and you sell a third of your position at 45 cents, and you keep 2/3, because as they get into the drilling program, there will be excitement. And you can trade out, buy Railtown, or you can hold it if the summer drilling program is successful. And I want to get the president on to talk to you. I believe that at a minimum, that project might be purchased away from the company, or the whole company gets bought out. But in the meantime, it might go to $1 or $2, $3. The reason I want you to take some of your money off is I do all successful resource companies inhale capital. So they will do a financing. I do not think they're going to ever do a toxic financing. Why? I've spoken with the president of it, and he's been an investor, believe it or not, in 1 or 2 of the stocks that we've been in. So he has no interest in doing that. So anyway, we'll get back to total metals if we can. I want to get into what I prepared. Okay, let's go through your comments first. Ricky Brogan is number 1. Hi, William and RT crew. Hi, Alan Weiss. Wow, fingers up 20% today. I wonder if Gary is having a pleasant day. I doubt it. I doubt it. It's that, I mean, he couldn't be fooling himself, but we used to have a term for that. That's a dead cat bounce. Fingers just having a dead cat bounce. There's nothing mechanically or fundamentally that's going to make that a sustainable rally. Everybody here should take advantage of selling 1 share of Finger and buying 1 share of Railtown. And I would do it with all your shares of Finger. I don't know if I can bang the drum more loudly. Sell Finger and buy Railtown. Railtown will haul your butt out of here, and it'll make the whole experience profitable, in my judgment. But if you hang on to Finger, it's going to get ever and ever and ever grosser. I mean, I used to be like everyone, I'm assuming, out there, and I would hold on to stories and all the research I'd done, but I knew my story. But the fact is, if you own, say, 100,000 shares of Finger Motion, you still got 25 grand. That's a lot of money. Yes, it's down from what you paid for it. You may have paid, you may have paid $10 for Finger Motion on 100,000 shares. So you're down all of $1 million, and it's awful, and you don't want to do it. But if you take that loss, you still have 25 grand to sell those 100 units of Finger. And the blessing is, sitting right next to you is another stock where you can buy 100,000 units, 100,000 shares, actually a slightly cheaper price than Finger, and on its fundamentals, on the size of the addressable market, on the wind in the sails of this orchestration layer, and it has other definitions, built into the AI story. You can turn 25 grand into $1 million, and you'll be glad you have those losses at that time. It's the way if you pay $10 for Finger. But if you hang on to Finger, I don't personally think it's going to take very long, but certainly by October, Finger will do minimum a 1-for-10 reverse split, probably more like a 1-for-15. And then the selling will continue. And essentially, your 25 cents is headed to 5 cents and lower. Why would you hang on? Out of loyalty? because you're hearing it on a conference call? How much longer do you need to feel this pain before you say, I give up my dream? I have a dream today. And go get onto Railtown. Get onto Railtown. Move from Finger to Railtown. Move. And you can do it one for one. If you have 100,000 shares of Finger, you can take 25 grand and buy slightly more than 100,000 shares of Railtown. Or just buy 100,000 of Railtown and take a friend to dinner. Railtown from 25 cents. If you climb on board, the first stop, I'll give you my round numbers, I think is 10x, $2.50. The second stop, unless they breeze right through it, I think it's around $5.50. The third stop, believe it or not, if the bid gets over $5 with a lot of volume, that stock could, the next stock could be $12 or $15. Call it $15. Well, you've turned a loser, 100,000 shares of Finger, all of a sudden you've turned 100,000 units, shares, you're swapping them into $1.5 million of Railtown. Why are you hesitating? Don't hesitate. Do not hesitate. And of course, my friends, that's not financial advice. It's opinion. All right, let me keep going. Ricky Brogan added 700 more. All right. Ricky, don't lose that number. It's the only one you own. And use it when you want to come home, or whatever the words are. T. Alex, hi RT citizens. Jeremy Bodle, is there news with Railtown? You know, that reminds me, I wanted to copy down what Ward sent me, and I didn't. Well, we got to adapt to where we are. I don't believe there's any news today in Railtown, but what I do think is happening is there seem to be bids in Railtown. Right now, you have 10,000 shares bidding at $23.99. The ask, of course, 58,000. That's spoofing. That's just spoofing. That's just spoofing. But it's acting much better. I think what gets these stocks out of trouble is bids, real bids, sustainable bids, real, maybe an institution or two. Jeremy, I don't think Railtown needs news to go up. I actually suspect that the most likely path is for Railtown to be up at some point, and you're going to look at your account and go, why is it up? And we have no idea. We have no idea why. And it might be happening now. I just saw 25-cent ask. They're doing everything they can to suppress it. And you know, if you're an attorney, you say, oh, it's legal, and there's a reason. There's no stock for sale in Railtown other than what these machines offer out of thin air. But they got to protect their position. And it's incredible what we learned yesterday. They don't call it front running. They call it internalizing orders. It's just absolutely unbelievable. Let me go on to the next one. Dave, FINRA is corrupt, SEC is corrupt, DTC is corrupt, Gary Gensler is corrupt. Well, I happen to agree with you, but as we learned over the last 3 or 4 days, I learned some things because I'm not an attorney. But I believe the spirit of the law, the securities laws, the spirit of what you've been told and I've been told the markets are, in that sense, they're all corrupt. But Gary Gensler never cared about the over-the-counter markets. Probably not even about the low-price stocks on the NASDAQ. The DTCC is owned by the brokerage firms. It has no duty to you. It's just a monopoly owned by the brokerage firms and the big financial institutions. The SEC, they say, are overwhelmed, but I don't know how they can say that with a straight face. It's a huge organization, and they can put money into computers, but they say they're overwhelmed and they've got to allocate money. But when you study it, unfortunately, they look for disclosure more than they look for whether or not investors were cheated. And I've argued for a long time, and it's weird. I don't think it was yesterday. I think it was the day before. The AI said, well, you're wrong. And then they made a list since 1975 of all these events that slowly ratchet the odds of success to all these people that essentially short the stocks. It's not a sufficient term. That's where they get us. Because when we scream and holler, and I do it, talking about shorting, it runs off their back because it's not enough of a description of what they do. What they do is so much more broad. And a lot of it's allowed. And that's why attorneys don't go after it. Bill Clinton's time frame, I don't know if he might have been distracted by Monica at that time, but the UCC laws changed, and under his administration, derivatives and certain aspects of the market were not regulated because Wall Street can police itself. I mean, Bill Clinton was the greatest Republican president the United States ever had. But it started then. And incrementally, the attorneys have been turning, like pulling in getting a flag up or pulling in a big catch. They've been reeling it in. And so I agree they're corrupt. I think as a human being, if you're in a position of authority, it's not just the letter of the law. It's what it's supposed to do. But technically, for example, the financing that Finger Motion just took from whatever it was, Alto Group or something, perfectly legal. Because they disclosed everything. Perfectly legal. The trading, like watching the trading right now in Railtown, there's 63,690 for sale. There's 33,690. 13,690. That's communication. I don't care what. Now the attorneys are going to say you can't prove it. That is communication. That's collusion. What's that 390 on the tag of any of it? Now it's 57,190, 7,190. The 190 and the 390, that's communication. but you can't prove it. So I think it is corrupt. There's great strength in knowing what's going on and looking at it with cold, jaundiced, maybe eyes, but just not fooling yourself, not hanging on to illusions, and you can make money. Even at the casinos where everything's stacked, sometimes people make money. And there are still ways, there are stocks in these markets where you can make money. But when somebody is telling you there's going to be a short squeeze and a stock's going to go to 3,000, most of the time they're going to be wrong. I mean, I feel embarrassed that I bought into that story. I don't know, 4 years ago, and I had these charts of short squeezes. I always said if it squeezes, which is right. And it's true. If a stock squeezes, you can get these great runs, but they're so difficult to trade. They're so difficult to trade. And they don't happen by matter of course. And the attorneys have made it so. They've incrementally made this thieving essentially legal. Essentially legal. And so Wall Street looks at it, well, we can agglomerate assets with Stevie Cohen or with Leon Cooperman or with Steve Fink or Alan Schwartz, whatever his first name is, or, you know, with all these Black Rocks and Apollos and these things, and then we can pay our sales force a trail and they get some commission. But look what you do. You put all your money in managed accounts. You remove legal risk. You remove any need to really have robust compliance. And you don't let your brokers, wealth advisors, recommend stocks. All right, so Railtown closed at 24.11, 87,000 shares. I take that as a change. It's only 87,000 shares. Finger Motion, 4.27 million shares. And it closed at 25.4. So you, based on the closing bid and ask, it'd be hard to get 1 for 1, but you're essentially there. Take it tomorrow. Take it. But I agree with you, Daver. That's my opinion too. I think the markets are horribly corrupt. I think they're failing at what they should be doing for American industry and American economy, but they're definitely failing on American investors. And it's wrong, completely wrong. It's like blaming a teenage girl for getting on a bus and going to Hollywood and ending up with a pimp. Blaming her. What about the pimp? You know? Anyway, let's keep going. G. Diddy. Hey, G. Diddy. Nice job, Ricky Brogan. Yes, sir. G. Diddy, William, please check your email. Okay, I will. Frankie Hemingway. I only have 207 finger shares. Is that worth anything? No. But you know what I would do? Frankie Hemingway, I don't know what you paid for it. But tomorrow, you got 207 shares. I'd sell the finger and buy 200 shares of Railtown. Now, if it were me and I had money, which I don't, but if I had money, I'd try to round that up to 500 or maybe up to 1,000, but just stick with the 200. The most likely path for Railtown, all things being equal, in other words, there's not a massive once in 4 generation crash in the market, which at some point there will be. But I think the most likely path for Railtown, let's say over the next 6 to 9 months, I'll pick a low number, in my opinion, $25. You'd have $5,000. And so is that worth something to you? I don't think 207 shares of Finger is worth anything other than it gives you a chance to buy 200 shares of Railtown. And if you buy 200 shares of Railtown, it goes to 25, which I think is a minimal target, by the way. You got $5,000. But if it goes to my long-standing $55 target, which certain people at Discord make fun of me for, because I guess they're all trying to look out for us and trying to build a community. You got $10,000, and only you can decide if $10,000's worth it. But if you hang on to Finger, I think your stock will be worth $7. So you got 207. My opinion, if you hold on to Finger, it'll be worth $7. If you switch it to Railtown, it could be worth 5 or 10,000. I think it's worth a lot. I think your 207 shares of Finger are worth a lot. Sell it and buy Railtown. If you want to do an intermediate step, you could sell Finger and buy Total Metals, and when it doubles or triples or quadruples, then buy Railtown. But the problem with that is, to my eyes, I think, and I could be wrong, but I think Railtown has caught a bid. I don't know who it is or where it is. I think it's below. You don't see it. I don't think you see it or I see it, but I think it's limiting what the high frequency algorithms are doing to the downside. I could be wrong with that. I might be seeing what I want to see, but that's what I believe. And I think Railtown, any day we could come in and this is a 50-cent stock, and then it's $1.20, and we're going to go, what happened? Why? And we'll find out later that, the Merrill Lynch Junior Trust Bust plus AI for your grandchildren trust fund just launched and started buying it. It'll come. There'll be buying interest. Frank Boss, I literally just sold all 35,900 shares of Railtown. That's not in my numbers, so I'm not taking it out at 24 and put it all into Finger at 25 cents. In my opinion, I don't think AI will make it out alive before year end. Railtown has been more of a pound town. All right, so you're one of the shills. Guys, if you listen to Frank Boss, you're going to lose everything in Finger. Everything in Finger. But he makes this argument that's in the headlines, and it's going to be in your head. It's going to sound reasonable. AI is not going to make it out alive. Well, what is AI? What is AI? What he's talking about are the big, if he's even meaning anything, if he does any homework at all. What the fear of AI are these data centers and the gigantic commitments that the mega companies have made to build out data centers. And what are the risks? The risks are LLMs even going to be the mechanism that best translates energy, chips, copper or light pipe, Corning ware, and other software, the stack, into usable end product for human beings in AI, but also for agents working with agents. And the thing is, this guy is just completely wrong. Agentic AI is happening. Companies are, and defense and otherwhere, they are adopting AI. He just doesn't know what he's talking about. Now, is the adoption slow? Yeah. It was slow when Microsoft was replacing the IBM centralized computer with the Microsoft PC and Microsoft software. It was slow at first. And then it's ubiquitous. And that's what's happening. But he's wrong. Now, I think there are some risks, huge risks, to companies like Oracle and maybe Meta. I would argue that OpenAI, even though reportedly its AI product for human beings anyway is better than anybody else's, I think OpenAI isn't making money. Anthropic is. You can see why. Their chat is such a pill, their guy. But so there's going to be a shakeout. But the overall world, the overall economies, there's a race to build out AI. Now, it may not be data centers the way it's envisioned, but it'll be some data centers. It may not be large language models. They're one thing you read about is small language models. I don't even know what that means. But it also might be distributed brains, distributed GPUs. For example, Apple, whether they intended to or not, made a bet on GPUs being in your computer, in your phone. And it may be that a lot of the AI you and I need to do will be in our I don't even know what to call these things, the phone and the iPad and the computers. Well, they're still going to need the orchestration layer. They're still going to need sensitive data routed to sovereign. Doesn't, someone will correct me probably, but I don't think sovereign is just country. Sovereign also can have the meaning of keeping data secure in a vertical rather than in a horizontal internet around the world. And so Railtown has the orchestration layer, which is the governance layer, the inference layer, the audit layer, the real-time ingestion layer. It still has a place. So ironically, this guy, Frank Boss, don't believe him. He's lying. He didn't sell and buy finger motion. He didn't do that. And if he did it, he'll be out of finger motion tomorrow morning. And he'll be on to COSM or some other crap day trade. Don't listen to him. But ironically, if, quote, AI he doesn't think AI will make it out alive before year end, whatever that means. If these, like an Oracle goes down, that's going to send shockwaves in the whole ecosystem of Wall Street and governments financing AI. But what is it going to mean? It's going to be meaning fewer data centers, and it's going to make it more important that you get more productivity out of the stacks that you already have built. And what he doesn't allow for is the Vera Rubin is coming up, and the Vera Rubin, I forget the multiple 5 or 8 or 10x, and it might be higher than that, on the ability to produce for agents dealing with agents, not human beings. And Frank Boss is going to be out of a cheating job. Or he's going to hire a computer and set up agents trading with agents, and AI is going to make him a lot of money. So he's just trying to appeal to your fear, get a worm in your brain. And it's ludicrous, absolutely ludicrous what he's suggesting. Finger motion literally is worthless. Literally. Because of their financing. And Railtown is probably worth, well, it could be worth a hell of a lot of money. So don't listen to him. Unknown Stuntsman. Hi, Uncle Bill. Hey, Steve, good to see you. T. Alex. Frankie Hemingway, yes. It's worth. See, that's a great thing, Frankie Hemingway. I love it about everybody here. Everybody supports each other, even if it's 207 shares. T. Alex summarizes it perfectly. 207 shares of Finger Motion currently is worth 207 Railtown. And that could be valuable. Could be massively valuable. I had a boss, well, he was the manager. I didn't respect him very much, which is probably my fault. But he once told me when I had a good day or a good month, and it was a number like that. If he said, if you've got 10 grand, which I think that's what I netted or something, he said, the hard part is getting that 10 grand to 100,000. But once you got 100,000, it's easier to make the next 100, the next, make it. I never forgot that. I'm not sure it's true because you got to control your emotions and everything. But 207 shares of Railtown could be worth 10 grand. And by the way, I think that's the starting point still. So, Ricky Brogan, G Diddy, thank you. Thank you. T. Alex. Quote, our view is that successful AI adoption begins with solving business problems, not selling software, said Corey Brandolini, Chief Executive Officer of Railtown AI. So Railtown is following the model that Microsoft had to, and maybe to a different extent, the Apple App Store had to follow. But you've got to sort of, I used to tell people, well, anyway, I won't tell my training that I used to do with people I worked with. I would just help people. It wasn't my job. But it's called service-led. So that's why Railtown hired WSR. You can look it up. It was announced last month. And so Railtown is moving from an R&D company, as per that same announcement, and this is my interpretation of it, it's not the exact wording, into a company who is leading particularly into the Canadian SME market, 6% adoption in Canada of AI so far. Europe, it's 45 or 50%. I don't know what it's here. But they're going to go in and they're going to show this is how it works. We'll give you the Railtrax ADK. That's free. Work with it. It self-improves. We'll guide you. And if you want us to show you how to use Conductor and Rail Engine, well, those you got to kind of pay for. But all of a sudden they're hooked. And once the key thing is these enterprises, they have a lot of data, and data is the lifeblood, not only of their companies, but of our very economy. It's what we deal with every day is data. And all of it has to go from SDK to ADK written, but it's been working. I'll just stick with my flip phone. Well, eventually the flip phone stops working. You need to go to a smartphone. It's the same human lethargy or stubbornness. But the thing is the team with this WSR and with the entire Canadian government encouraging it, they're going to go into all these companies and they're going to lead with the service. And they have to answer, is my data safe? Is it secure? I don't want to pay more than I'm paying Microsoft right now. What does it cost me? I want to know that if there's a riot of Canadian Mounties at Kamloops and it shuts down the data center, that your service has redundancy so that I don't get shut down and I don't lose my data. And I think in general, what a CEO or a chief operating officer wants is the sense of certainty they have with a Microsoft or with an Amazon that was built up over years. And so that's why it's service-led at first. And I think that's what Corey's talking about, solving business problems. But eventually, as everyone does switch and trusts their data to this new world, there's no effort to roll out the next upgrade. And that's called product-led, I guess, product-led growth or product-led revenue. So, yeah, that's what he's doing right now. And I think we're going to see a very rapid adoption of Railtown. You know, you could argue they got behind maybe compared to Langchain or Vercel. Was that the name of that dog in As Good as It Gets? Why don't you sell crazy? Sell crazy somewhere else. Quote, most Canadian SMEs recognize that AI will reshape how businesses operate, but they need experienced partners who can help them identify where AI creates value and how to implement it successfully. I think that's further to Corey's quote. I agree with it. That's T. Alex, lion of all trades. But Railtown is not a precious metals mining stock. Man, did you learn that in college or grad school? Railtown is not a precious metals mining stock. That's true. And it's helpful. It's helpful. I do think there's going to be a role for AI in the future in using resources and mapping resources and defining how to get resources out. So I do think there is going to be greater use of AI in all extractive industries. But you're exactly right. And if you hadn't pointed it out to me, I probably wouldn't have even noticed it. So thank you, Lion of all trades. T. Alex, by leading with consulting and implementation services, we become a trusted advisor throughout the customer's AI journey while creating natural opportunities to deploy our proprietary software platforms. Exactly. And they started, and I think Railtown is working through August, by the way. They started in July. This marketing firm, who has deep client penetration, the sales cycle apparently is 30, 60, 90 days. Well, they're starting in July. So maybe September, October, November, we start seeing a lot of that implementation. And, I assume the numbers work there too. 98+% of enterprises in Canada are the small to medium enterprise. 6% or so realistically have AI, that some people say 10 or 12%. But if you're a big consulting firm, you're not going to go after the smallest parts first. You're going to go after the 20% of the SMEs who are going to give 80% of the revenue. And I think you're going to start seeing great news announcements, T. Alex. Mary, my eyesight, Mary Patton. Good afternoon, all. Yay, Mary Patton, bought 1,300. That's perfect. Good job, Mary. Jeff Jones. Let me make sure it's Jeff. Yeah, Jeff Jones. Is Railtown keeping up with the AI chips as they progress? Yes. I believe, and you make a good point, and I don't know if you meant to make it, but I think you sound like you know what you're talking about. Some of this, what we feel is delay, might be the delivery of the Vera Rubin chips, which are designed for this agentic AI, agent to agent, which when you think of it, they don't have to eat or sleep. They don't have to get in a fight with their wife. They don't have to go to the doctor, and so on. So Vera Rubin is set up to expand the capacity of stacks considerably. And in fact, Railtown's interface, it maybe a name is to call it the conductor cloud, but the platform, the conductor platform, is agnostic to which data center, and it can plug in and understand 33 and growing different software languages. And yes, it is keeping up with the chips and the advances in AI. I believe it's ready, even potentially, and I might be overstepping my knowledge here, but I think it's ready to handle quantum computing. It's not the chips, it's the directing of the agents. It's the metering. It's the monitoring. It's the auditing. It's the governance. So they don't necessarily have to interact with the I don't know what's a good analogy. They don't have to be in the engine of the lorries or the trucks or the taxis or the station wagons or the SUVs. They're the, the patrolmen and women that are patrolling the highways. They keep the cars in the lane and the trucks in the lane and going in the right direction. They monitor it, they give tickets, they pull out problems, and then there's the toll booth. They're the ones collecting the tolls. So if the engines change in the truck, they're still the ones making sure the truck stays in its lanes and does what it's intended to do, and they keep a record of it and they enforce the rules. G. Diddy, Mary Patton, well done. Well done. Lion of all trades. If I'm a shill for Railtown, then you're a shill for Finger and all the other stock retail owns. You're washed up. Are you short? Are you short? I would say you must be a young guy, Lion. As you get older, there are things that change. I don't think I could play softball very well anymore. I'm essentially invisible in any place that I walk into that matters to me. People look right through me. For myself, through a series of disappointments, I did have a great change in circumstance. And if you're talking about that as being washed up, I hope that never happens to you. But luckily, so far anyway, my experience and my brain and my motives haven't changed, and they're not washed up. My goal is, it doesn't mean I haven't made mistakes. It doesn't mean I haven't been intemperate. It doesn't mean that I shouldn't have listened to the whole idea of the squeeze idea of 3 or 4 or 5 years ago. But I've adapted as I've learned, and I show it. I don't hide it. I show it every day, what is out there and what I learn. I don't sugarcoat anything. So in that sense, I don't think I'm washed up. I didn't say you're a shill for Railtown. I don't know where that comes up with. I don't notice that you particularly support Railtown. I don't think you're promoting Railtown. But one thing you do, Lion of all trades, is you promote the idea that these investors can make money hopping from one stock to another stock and day trading. And the fact is, they don't spend as much time in front of a computer as you do. My guess is you get paid to do it too. They don't get paid to do it. I don't know that you do. And they don't have the emotional, hey, I got in at $1, it's $1.17, I'm going to get out. I got in at $1.10 and it's 97 cents, that's enough. They don't have that. So I think it's a real mistake for people to treat these investments as hot money. And to the extent that you're trying to keep people's money hot, I think they're going to lose that money. You can decide whether that's a service you're providing or not. I'm a shill for Finger. I think you should ask Ham what he thinks I am for Finger. I just try to call it as I see it. And all the other stocks retail owns, I try to limit what I can talk about to what I can have a sense of. But I have opinions on a lot of stocks. And I do think, I don't know if you understand what goes on. I've been learning, but I do think to the extent that retail buys any of these stocks under $5, whether it's a good stock or not, and many of them are a good or a reasonable investment. And for you who's a day trader, maybe you have the ability to essentially front run the algorithms that are in servers working 24, that's AI, by the way, 24/7. Maybe you're better than those are. Most people aren't. But the odd effect, for example, of Railtown, for about 14 months, well, I think it started the 14th month. I've been really, they've never, I thought I was going to get a hat. I never even got a hat. But retail buying in the stock allows those algorithmic machines that sell what they do during the day. They sell stock they don't own, and then they buy it back. They do it all in dark pools. And at the end of the day, they true it up, and they actually report that they were long on the day. And it's facilitated by the dollar volume that retail gets in there. So I don't think that makes me a shill, but ironically, if someone like me is talking about a stock and retail is buying it, at least in the short run, it's helping those high frequency trading machines strip pennies every day that add up to a lot of money. But that's hot money talk. That's hot money talk. And this isn't about hot money. And it's given us an advantage of being able to buy almost 24 million shares. So, there's a yin and a yang to everything. But Line, I don't think you're a shill from Railtown. Far from it. I think you are a hot money guy, day trading guy. Frank Boss, I'm not going to repeat that. Sudeep Panday. Hi, William. I bought 1,000. Sudeep Panday. Good for you. Are there any promising news for this company? Look, I don't think it's about news. Yes is the answer. I think there's going to be, particularly after Labor Day, I think there's going to be a series of powerful news updates. But I don't think that's what's going to make the stock go up per se. What's going to make the stock go up is when institutions buy. Because otherwise the Grim Reapers will continue to reap. They don't read the news. They just want that dollar volume to steal from. And retail can only really buy once. They can sell essentially endlessly. But the news or the updates and the progress at the company, it's going to lead to institutional buying. And what I think is coming, Sudeep, I have to say nobody's told me this, but what I believe is coming after the vacations in Canada, that you were going to be able to see publicly. I think the first news is likely to be something led by the government or one of the provinces or one of the, I don't know what to call it other than think tanks, one of the organizations like Digital. But I think the first thing we might see is related to government funding or sponsorship of some projects in Canada that Railtown's involved in. Why do I say that? Because the reason I think that, it's the only thing that makes sense to me for this ongoing blockage of news and information is a government mandate to keep things quiet. Number two, and I'm debating what to give number two. I'm going to say number two, we're going to hear something out of TELUS or out of Zaid Atufat Shamsi's division on the data center that he's building. It might be that they installed the Vera Rubin. It might be that the Kamloops is ready to go. It might be that they expanded Rimouski. If we're lucky, they'll mention Railtown, but it doesn't matter because institutional analysts and institutional funds will have access to information. And I think it'll lead to their buying. I think it'll be TELUS next because they announced already, and it feels like everybody's waiting on TELUS. It just feels that way. Secondly, I think you're going to see news or update regarding the Buzz Hive, maybe Bell Canada data centers that are being built. And that, why do I say that? Because Dr. Tom Core, who's the developer, the head of corporate business development for Railtown, whatever the exact title is, he has posted, liked, reposted, I'd say at least 50 or 60 times, things to do with Hive Digital and that whole setup. So I think that'll be number three. That'll be sort of September. Then I think you're going to see news from the WSR marketing campaign. And I think you're going to see probably a plethora of announcements happening in the third and fourth quarter and ongoing as Railtown signs up the small and medium enterprises. Fifth, which might be tied to the funding and it might not, I think you're going to start hearing about the AIP companies and their revenue and their adoption. And I think that's going to be significant. I think unknowable is if Railtown's platform becomes visible and widely acknowledged as, my opinion, best in class. But that doesn't mean it's going to capture the whole orchestration layer. But the target market for software in general is trillions of dollars a year. This subset, I believe it's possible that Railtown could be doing 2 or 3 billion in revenue a year in the not too distant future. And I'm talking 2, 3, 4 years. But that would be dramatic. So anyway, I think you could see announcements about the AIP revenue and roll-ups and that whole strategy. And I think you could hear announcements, I don't know what to call it, licensing maybe, or just other countries, other data centers signing up Railtown. I think it's going to be quite dramatic when it gets started. But any one news story, the computers will sell into, and they'll sell and they'll try to make you think, oh, that wasn't really good news. It's going to be what the institutional analysts do with the information that's going to matter. I think, to me, Railtown always is already acting like some institution somewhere has a bid under the stock price. Frank Boss. You're a shill too for fingers, so I agree, washed up for sure. Well, I must not understand what the word shill means, but I'm not a shill for that. I have liked the finger story and I have invested in it, and then ultimately I don't want to go through the story again. I don't think I'm a shill, but maybe I misunderstand the definition of shill. Washed up? Yeah, I might be. I don't know what you mean. I'm not married. I don't have kids. I'm not much to look at. Not much on the dating market, if that's what you're talking about. But I don't know. I'm older, so maybe I am washed up. I don't know how to judge that. But if you don't mind, for me, I'll wait till I'm on my deathbed to determine when I got washed up. But you're welcome to your opinion. Are you even certified to give financial advice to people to buy Railtown? Well, I don't know what you're talking about, certified. No one is certified. Most people aren't certified. But for many years, like all wealth advisors, or most, at the brokerage firms, I was Series 7 licensed. I was trained to, it's a conflicted duty because your firm wants you to sell the hot product, but you also have to look out for your client. There's no certification that I know of for that. I think the only thing you can do, if you're trying to give opinions and perhaps advice, depending on your definition of that, because I'm not giving Frank Boss. I'm not giving financial advice in a traditional fiduciary role. I'm not giving financial advice to any one person here. This is opinion, editorial, maybe entertainment. But I don't have a deep enough understanding of each individual's financial situation to give specific advice. But I think I can in general say that if people have committed money to AME and GMC to participate in the squeeze, well, that kind of money is speculative money, high risk money. So to the extent that people have put money in those stocks, in ZJYL, GDC, G-Bucks, Finger, MTEN, CRTD, GTII, that money, they've already committed that money to that speculative bucket, that high risk bucket. I would even say the manure bucket. And for me to say, take that bucket and put it in Railtown, that's not a radical shift in allocation of risk dollars. In fact, I think it's an improvement. Otherwise, I wouldn't talk about it. But it's not changing their risk profile, and that's on each person. And obviously, everybody can seek advice if they can get one on the phone. Seek advice of a so-called wealth advisor at Merrill Lynch or Morgan Stanley, who's going to tell them, no, don't do that. Why don't you put it in this, this AI 2026 fund? Or why don't you put it in this whole life policy that's going to invest in AI? Ward Richardson, plain and simple, no data centers, no AI. Well, there you go. I don't think you can do AI without data centers. Now, the question is, can you do it with fewer data centers? Maybe over time, that Moore's law is going to apply to data centers as well. We don't know. But I think some really smart people, and, they're just human. They can make mistakes too. But they have seen this probably 5, 10, 15, 20 years ahead of the rest of us. And they're not building data centers on a whim. They're building it because the demand for AI, particularly when our economy moves to agent by agent, agentic AI, it's going to need the capacity. I agree with you, Ward. Lion of all trades. I am joking, by the way. I'm bored and just being a clown. How are you, William? I'm fine. I guess I wasn't in much of a clowning mood. So I'm sorry I didn't pick up on it. I do wonder sometimes where my sense of humor went, because I feel like I lost my sense of humor along the way. Well, Ward Richardson, we are experiencing a $7 trillion global data center build out right now. Well, think about that, Ward. And I know you have, but other people think about what Ward's saying. $7 trillion, which may have all been spent, or maybe it's only partly spent, but it's trillions of dollars that have been invested. And there's bondholders that want their money back. There's other owners want their money back. There's equity that wants it back. There's private equity wants return on their money. Those would be huge sunk costs to walk away from. I don't know of another industry in the world maybe tattoo parlors, or maybe the gender studies departments of all the higher education. But I can't really think of any time, maybe in war, maybe, but I don't know when economies allocate the equivalent of 7 trillion without thinking it through, number one. And number two, if there's bad deals there economically, what's going to make it work is the orchestration layer. And that's real term. I read to you the other day that private equity for companies like Vercel, Langchain, and there's several others, I can't remember them all, they're hoarding. Private equity is hoarding the orchestration layer companies. And the orchestration layer name it's actually broader than that. They keep changing the name, but it's that cartilage, it's that interface between the user and the stack and the data center. And the reason they're hoarding it is $7 trillion without it is just sunk cost. It's just thrown away money. With it, $7 trillion conceptually can lead to many multiples of that in revenue over the next decades. So, when they say AI is in trouble, I think they're talking about the MAGA or the MAGAs, the magic, the top 7, 8, 10, 12 companies. And maybe the data centers, the insurance companies and the private equity companies that back data centers. But I'm not sure about that. Well, that's what they're talking about. In other words, I'm not sure they're going to be in trouble. But that's the circular financing argument, and that's what everyone's glomming onto. I don't think they're talking about the actual software. And that's the thing that's hard to understand. All of the software ever written, unless our brains were written by somebody, all of the software ever written from the 80s, the 70s onward, they used SDKs to keep it simple. And all of it's going to have to be rewritten and run by and updated by ADKs. It's trillions of dollars. That's software. Is it AI? Yeah, it's all AI related. That's what ADKs are. But that's software. That's not data centers. That's software. Okay, here's Gandalf. I don't know where Gandalf gets his information and why he's saying it. I don't think he's studied anything. But let's see if he says anything intelligent. Gandalf says revenue will most likely come slowly. I don't expect several million annual recurring revenue out of a sudden, all of a sudden. Well, I guess Gandalf knows what he's talking about. There's no indication whatsoever of this. Well, if you don't do your homework, I guess you can more accurately say that you've seen no indication because you haven't done any homework. You don't start a 500,000 WSI campaign when you're swamped with customers. You don't? You don't? Why not? Why not? Railtown is a Canadian company. Railtown purchased another Canadian company called, I can't remember the full name, but it's AIP, the AI Partners Network or something. I call it AIP. They just brought on their 200th company. And the whole idea there was to copy Constellation software. In other words, rolling up, acquiring, rolling up, and being sort of the center brain and the central platform that everybody uses, but letting the management keep ownership and run the companies. It's a brilliant model. AIP was founded by two people who funded Constellation Software, John Ruffalo and Mike Norbrega at Omers. They gave the $25 million. It allowed, I think it was TD Bank, to get out of their investment. But that $25 million grew. I don't remember the top enterprise value for Constellation Software. I do know that the stock price went from under $10 to over $5,000 over a period of about 15, 16 years. Ironically, that was the software as a solution model. It was vertical. It's been hurt, and Leonard retired. But AIP is an AI as a solution model, and they're going to imitate that. So there's going to be the idea of rolling these up and building a cash flowing powerhouse. That's one idea. The other idea is that this is all related to AIP, and it exists. The other idea is to turn the $500 million in revenue the 200 companies generate, to turn their annual spending on hyperscalers, to move it to wherever Railtown is on data centers, and thereby earn a commission, basically, earn a split of the fees. I don't know how quickly that transfer, I used to think that would be very rapid, but nothing in Canada is rapid. And I think it meets the same slowness initially, because a lot of those people are using Microsoft or Amazon, so they want to be sure that it's going to work. But on the margin, on the AI they build with the Conductor platform, the AI they build for Agentic AI, the AI they build for the Vera Rubin chips, that'll be split for sure with Railtown. The other idea is that conductor in the AIP network, they have over 5,000 end users, that the conductor platform becomes the common platform used by all. That's going to generate consulting revenue, but it's also going to generate ongoing revenue. So these are sources of revenue you haven't begun to see. And they could, that revenue could show up. I don't know why you say it's going to show up slowly. But when it starts, it's not that it has to be booked. It has to be predictable, projectable, and repeatable. It's going to be amazing. That's just from the AIP. That's 3 or 4 or 5 different ways of creating value and revenue just from AIP. And then you've got Railtown hiring the marketing company to go after Canada's small and medium enterprise AI business. They haven't begun to transfer the data in Canada. It's a smaller country than the United States, but Canada is one of the top 20, top 13 economies in the world. They're going to transfer over slowly at first, and then, like all transformations, it'll be almost everyone to AI, letting data be run by data centers, maybe by modular data centers, AI being run using data being run with AI. And so they're going to go after the small and medium enterprises. And my guess is because they have a head start, because they're Canadian, and because the Canadian government is putting money into it, they're gonna get a lot of purchase. And I think those contracts are going to start showing up. And it doesn't matter if it's going to be 500,000 here, 1 million there. It's going to be the magnitude of what analysts see ahead of them. And then you have no clue what you're talking about data centers. Imagine a world where Railtown in Canada only, becomes the interface, creating an alternative because of the Cloud Act, creating an alternative to Microsoft, Amazon, Google, and even SpaceX. And that alternative is essentially a gigantic data center called Canada, and it's the conductor platform that acts as its interface, and it directs electrons or agents to Microsoft if it's not sensitive, to TELUS if it is, and everything in between. You have no idea what you're talking about. That revenue is going to hit, and it's not going to, and it's, again, it doesn't have to be printed. It has to be projectable. But if Railtown's on top of TELUS's data center and Entwistle projected $2 billion a year by 2008 coming from AI-enabled technology, what is it other than their data center? And they've already announced they have a deal with Railtown. Call it $1 billion. If analysts can project $200 million in repeatable, growing, annual, recurring revenue at, say, 90 or 95% margin, you're going to be left behind. And I know you think it's going to come slowly and you don't expect it, but you don't, respectfully, you don't know what the hell you're talking about. Lion of all trades, I haven't promoted anything, honestly. That's probably more accurate than you want it to be. I just observe charts, go over news, and see what's happening in current events with my people on my stream. I don't promote day trading, nor do I get paid to. Well, you notice I never come on your stream trying to get your audience. I am a lone wolf. All right, I believe you. I believe you. But you're hot money. What I mean by hot money, you want day traders and swing traders. You believe in charts. You could believe you can get in here, trade out there. And maybe you can. Maybe you make money doing that. But not only do most people here not have that talent and do not have the time, they've already lost 100,000, 200,000, 500,000, $1 million. I speak to people, and I'm not a day trader. That doesn't mean if I hear something makes sense to me, doesn't mean I'll not try to trade it. I'm not saying that. But I'm not trying to promote here what I think is idiocy, is trying to day trade stocks that's only mechanical direction, particularly after they take a note. The only mechanical direction is down. Now, you may be able to bob and weave and do it, but some of your ideas, frankly, have been a disaster. But you're probably not in them long enough, maybe, to experience that. But people here are going to buy and hold, and it's not right for them. See, here it is, Lion of all trades. It's up to them. It's up to them. I don't see it that way. I really don't see it that way. If you have a child who has never been trained not to walk into the street when there's traffic, or not to play in mud that's caused by a sewer, or if you have a child that has not been taught to stay away from the edge of a patio, or a child that's not been taught to go into a swimming pool wearing flotation devices, excuse me, you can't say, oh, it was her choice. I don't like this exemption of responsibility when you give people the idea that you know what you're doing, which you don't. There's nobody day trading that knows what they're doing. Occasionally they're right, and they only tell you about the times when they're right. But to fob off responsibility on, it's only up to them whether to decide to take on a trade, day trade, or whatever. But I don't go on my streams and tell people to drop their other investments for one stock. I don't do those. Well, wait a minute. Now you're arguing that the stocks you trade in actually have value? COSM? I don't know which ones you recommend. Sorry, this is for energy so I can keep going. You do everything back-assward, in my judgment, Lion of all trades. You look at a stock price and you see opportunity without knowing anything about the company, without knowing the risks in the company, without knowing their financing, without knowing their addressable market, without knowing their management. To me, that's back-assward. I think what you have to do is have an edge. And that edge, I suppose, can be trying to be first if you're day trading and you see a breakout. And I guess you're kind enough to share that with everyone. But where are you when it breaks down? Are you taking your morning constitutional and you don't have time to get on live and people lose their money? Probably. But if, on the other hand, you study a company and there's a whole bunch of parameters, and I've been doing it a long time, I think there's nothing better than perceiving the, for lack of a better word, the gut and the heart and even the brain of management. But you don't do that. You can't tell that by looking at a chart. Charts today are all subsumed and I don't know about if controlled by is the right word, but it's computers that are trading those charts, not human beings. And I don't care how smart you are, Lion of all trades, you can't beat server after server trading in milliseconds. You just can't do it. And when you get my audience to go along with your bullshit, they're just sitting up there to be stripped so those machines can take their money. And I don't like it. And you can pretend that you're offering a service, but then by your own words, you say, oh, it's not on me. It's only up to them whether to decide to take on a trade. I think you're a coward, a pussy, and you're not taking responsibility. That's my opinion. But I'm sure you're smart at what you do. I don't think you're a man. I think a man takes responsibility. And I think a man tries to do the right thing. And the man tries to see it to the end. That doesn't mean the results are guaranteed to be good. But I don't know why people waste their time with you. Just for entertainment, I guess, which is fine. That's okay. But I think it's more important to understand what a company is worth first. And then you look at the stock price. And then you go, wow. I mean, taking an example, finger motion, over a year ago, the market cap, as I recall, was something like 180 million or 140 million, 160 million. I can't remember when it was $5. I think it was 150 or 180 million. And what I pointed out to people at that time is their revenue at the time, I think it was 35 million a couple of times. They weren't really making money and it wasn't really growing. And outside of some of the upside stories, typically that kind of revenue, my experience, could trade as low as 1 or 2 times on an enterprise value. So to me, it was overpriced. You're not going to see that in a chart. You're not going to see that in momentum. And then if you're out there spewing information like you know what you're talking about, and then you say, oh, it's on them to take that decision. Oh, I didn't do that. That's not how I see it. I mean, I do believe it's on people to make their own decision to buy and their own decision to sell. But I see my responsibility to best I can to show people how to address investing in something, what they're doing, what are the risks. And over time, I've learned how mushy these markets are. They've completely changed from when I was you know, on my desk, so to speak. So I take much more responsibility than you appear to. And I think if you're giving, which you are, you're giving your opinions. But if you don't care what happens to the people you're giving those opinions to, I don't know why they listen to you. And to go to your point, I can show you stock after stock. I'm not going to remember all the numbers. But a year ago, I'm just going to, it's the broad concept. That's right. I don't remember the exact numbers. Let's pick one other one. I could use so many other names. And these prices are wrong, but they're in the ballpark. And so somebody has a, you think these are all investments. Nobody knows why they were in ZJYL other than a squeeze. No one knows why they were in Finger other than a squeeze. No one knows why they were in G-Bucks other than a squeeze. Those aren't investments. And they're all of the same profile. My opinion, crap now. But, you know, I thought Finger had some prospects. But about a year or so ago, it was obvious the C2 contract was nothing. But you got to adapt. You can't just, you got to change. So when I say to people, get out of all of this, all of this, all of this, and put it all in Railtown, I'm not telling them to change their risk profile. I'm telling them to get out of these hopeless stocks that are in the same bucket into this stock with hope. The other thing I'm trying to do, and we can only do it retroactively, but if you're a private equity firm or you're a venture capital firm or you're an investment fund, which I think we have become, you raise money from investors and you put your money in a specific category. That's unless you're a generalist. And your goal is to fund 12 deals over time. Each deal you look at, you might have a parameter to make sure they're going to have the shot of 10x. You don't intentionally throw the money away, but you understand that out of 12 deals, six of them are going to crap out. They're just going to be worthless. And of the remaining six, maybe two of them give you your money back, plus or minus a little bit. And then out of the remaining three, two more maybe do give you the 10x. But those two at 10x doesn't make up for a couple making no money, just getting your money back, and then losing everything. But what you're counting on is that 1 out of 12 investments gives you 100x or more. And it's that one deal that makes a fund. And that's what you read about in portfolios. And so what I think's happened here, Lion of all trades, and I appreciate that you don't really understand it. What I believe can't remember them all. Let me see if I can, there's any other names here. Oh. One, two, three, four, five, six, seven, eight. I'll pick one. People didn't invest in, but I'll put it down there. I'll put one that I thought. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I just need one more. I hope my brain works. I remember. Okay. So it's my opinion, Lion of all trades, I don't think you've done any studying of how the market works today. Just to pick these names, and I'm not picking on anyone in particular, but people here have invested in 11 names out of 12. They did it one at a time and in different amounts, but essentially that's how private equity does it. They don't do it all at once. They layer them in, but they already made their 11 commitments in this manure-filled short squeeze. We're going to make life-changing money. It's going to go up 100x. Whatever was on their mind. A lot of these companies went up 10x, but it wasn't good enough. They went up 20x. It wasn't good enough. I don't know what was on people's mind, including my own. I don't know what was on my own mind. We're all human, but there's 11 names already in this portfolio that have done the crap out. And so when I say take those losses and put it in Railtown, I'm suggesting to people this is the one company that's going to pull this whole portfolio professionally out of the morass. So I'm sure you don't do anything intelligent in your giving advice. I'm sure you don't. I don't think you realize how honest you're being about your own limitations. And a good man's got to know their limitations. Out of respect for you, you need to come clear with the things you say. because in all reality, you don't know me. Well, I don't, but I know you come here for my audience, but I don't know you. That's true. I don't know you. I know what you write, but I guess your point would be that it's up to me to interpret what you're writing. So that's really on me. Come on. Lion of all trades, I do wish you the best in all that you do. Thank you for that. I wish you the best for all you do. Keep day trading. Keep day trading and swing trading and giving advice to your audience about political things. It's great. I've never come on and criticized you, yet you just criticized me here, and I respond. But I also am defending my audience because you are a threat to their financial health. But again, if they want to go to your whatever you do, I'm not there counteracting it, but you were here counteracting what I'm trying to do. And then you're saying, I don't know you. Well, I know what you're doing. Pluto, a planet. This so-called lion seems to be an intelligent chap. You could have him as a guest on your show here. Well, you could, and I'm not against it, but here's the thing, Pluto. What these people want to do, and Lion might not be part of it, and I can't tell the difference. He's right, I can't know. But what they want to do is bring their marginal, limited thinking up to par with the strategy. And I'm not saying I'm smart or anything. I'm just saying I'm trying to show, and people here are showing each other, by the way. It's not just me. Trying to show that if you do the proper due diligence and you stick to your guns, you have an opportunity to make money. But they want to come up and show that the hot money strategy is equivalent to that. And I say it's not equivalent. And there's no meeting in the middle. What is happening here, and it's evolved over a period of time, but we have essentially 24 million shares of Railtown, and we have some shares in Total Metals. I'm willing to look at some other stories as well, but let's just focus on the big one that we have. We've done the due diligence. We know the risk reward. And if 24 million shares goes to $10, you don't think that's going to help Lion of all trades continue to proffer that he adds something to people's accounts by day trading? And let me suggest it. He's saying, come on my show. I'm going to show you when to get in and when to get out. I don't know. I wish him luck with that. I do think another thing, if you're trading, let's say your account is 25,000, and it's split into 4 positions that are all crap, 6,250 each. And one of them's Railtown. For me to suggest that you sell these and put it all in Railtown, right now, each of these positions is 25% of your account's net worth in this example. If I'm right, and you put that entire 25,000 in Railtown, and you have 100,000 shares of Railtown, and Railtown goes to $25, why would you want to be in anything else? Well, then you have $2.5 million. And then when you go to Lion of all trades ideas and you want to put 6,000 or 10,000 or even 25,000 in one of his ideas and day trade it, you're just playing with extra money. You're just doing it for fun. But when you're doing it now, when it's your whole account, you can't sleep at night. You're putting your whole future at risk. And I just don't see it as being the way, it's just a different point of view. I'm glad that Lion felt like he can come here to my audience and make himself look like a saint and make me look like I'm unreasonable. But I would suggest to you, whether he is one of the parts of the bashers and the charm boys, he's acting like one without realizing it. And yes, I wouldn't mind having people here, but I think for people to go take part of their Railtown to go day trade with Lion would be a mistake. So pardon me, I'm not going to meet him in the middle. I'm not inviting him on right now. But when the accounts are worth $2.5 million each, okay, come on. Pluto, maybe to have some healthy debate and discourse. Okay, it's not worth it. I've already given him more attention than I wanted to. Lion of all trades, I wouldn't mind that, and to actually talk about who I really am someday. Ward Richardson, data centers have all the hardware. You cannot possibly operate a data center without software. There you go. There you go. Pluto, Lion is very, well, all right. I think you're trying to be mean, but obviously lions have a mane, if that's what you mean. Lion of all trades, I guessed COSM, but I was confusing you with Tolstoy King. Tolstoy King came in and said, COSM is on our radar, and he had another one. But it just gets the stock to go up so the machines can make money. And if you can't admit that happens, maybe you don't participate in it. I don't think you see the markets realistically. Lion of all trades, your perception of me is quite hilarious. Well, I'm not laughing. Lion of all trades, and not going to lie, theoretically speaking, someone would have knocked your ass out if you ever had said something like that to someone's face. Maybe you need a wake-up call. And then he backs off. That's amazing. Did they train you this in your generation, not to take responsibility? And that's just my opinion. Lion of all trades. Again, you don't know me, but don't fuck with me. It's all right, so you're threatening me. All right, Lion of all trains. Just cynical. Check yourself out on YouTube, and Lou was right. Maybe you shouldn't have kept streaming. See ya. I don't think that's what Lou said. He was the opposite way. I have a very positive opinion of Lou, by the way. Frank Boss, just give it up, old fart. Frank, this is all useful. Frank Boss, you should really stop talking about people that way, you sour piece of shit. William, Frank Boss, William, you need to get railed. Frank Boss, denial setting in, guys. Frank Boss, you're harassing the poor guy. All right, so I finished Frank Boss, and now he's deleted. And I finished line of all trades, and now he's deleted. All right, so we don't have to deal with them again. I'm sorry. I don't need to meet in the middle on those guys. All right, it's now 5:30. I want to get on with what I was going to talk about. I might have to take a bit of a break. I don't know what that noise is. Hopefully it's a motorbike rather than a chainsaw. Sounds like a chainsaw, doesn't it? Well, anyway, let's go to what I was going to try to talk about. There may be some people caught short in the stock. I guess that's possible. Okay, I'm going to change the subject. Well, no, let me start up here. Let me get the Frenchman out of the way first. I find him the hardest to focus on. Okay, here we go. It just takes a while for them to download. They're still downloading. And I want to sneeze. Look, if the argument is that I'm old, I accept it. I'm old. Okay. I got to get that comment down. Okay. So let's start here at and let's see what the Frenchman is saying. I don't even remember my question, but okay, it was finger motion. Why did finger motion trade over 40 million shares? Is it tied to the Weidel note? Short covering, is the uplift today a signal to hold or to buy? So the answer comes back. This is Anthropic AI. Quick correction on the frame before the answer. The tape you're reading as an uplift is a bounce off a collapse. On August 3rd, finger ranged from 15 cents to 19 cents, closed at around 18 cents on roughly 28.8 million shares. My screen showed 42 million. So anyway, on roughly 28.8 million shares against a 1.55 million average, with the market cap down to about 11 million and the 52-week low on finger set at 15 cents a share. So the 40 million is a 2-session figure or today's continuation. Either way, it's turnover in a name that just repriced, not accumulation into strength. On Weidel, I can't source that name in any finger filing because I typed it wrong. The May 13, 2026 note counterparty is disclosed only as the selling shareholder in the summaries, and they call that disclosure. The actual name sits in the selling stockholders section on page 38 of the June 22nd 42-4B3. Worth pulling before you attach your name to it. Well, we pulled it before, but on what the volume most likely is, the 44 million or the 28 million in finger motion, the volume most likely is not short covering. Short interest in a 61 million share, 11 million cap name is typically a few million shares at most. Covering doesn't manufacture a session that trades down to 15 cents. And of course, this Anthropic never sees that there may be all this naked, what we call naked. And the volume isn't primarily conversion supply either, because it can't be. The exchange cap limits the holder to 12,256,260 shares before stockholder approval, which is under a third of the volume you were looking at. Conversion supply can initiate a cascade without being the bulk of the tape. 40 million shares at 17 cents is about $7 million in notational value. On the other hand, that 7 million gives the machine something to work with. If they can steal half a penny, a quarter of a penny, a tenth of a penny, a thousandth of a penny, many, many times a second, that's what it helps. And that's what I think people that get you to day trade these names are helping, is the high frequency traders. That's a liquidity regime change. Sub 20 cents pricing pulls in retail and algorithmic churn makes money, that turns the same float over repeatedly. It carries almost no information about value. The arithmetic that actually matters for your bet or your beat. The floor price was set at 20% of the NASDAQ minimum price on the day before the May 13 purchase agreement, and it resets automatically every 6 months. If a floor price condition exists, the holder may require the company to satisfy the monthly conversion amount up to 1 million of principal in cash at 7.5% premium. Against a 94-cent fixed conversion price, the implied floor is somewhere near 19 cents. The stock closed August 3rd at 18 cents. So you should verify the exact minimum price against the 8K. But essentially, if that arithmetic holds, the note has flipped from a share settled instrument to a cash demand instrument, and the proxy shows $987,000 in cash against 2.345 million of quarterly operating cash outflow, or 37.9 days of cash use. An event of default accelerates at 125% of outstanding value with 12% default interest. That's your FAR bank test, and it fails cleanly. No named, contracted, dated repayment source. The Blue Flare Alberta site that Finger Motion announced is still a non-binding MOU. Stockholder approval isn't until October 6th. The NASDAQ bid price clock runs to roughly late December, which means a reverse split. And the 6-month floor resets on or around November 13, right behind it. So if you split it up, the floor resets downward against the new nominal price. That's the ratchet, and it's the piece to focus on. On hold or buy, I'm not going to give you a recommendation. I didn't ask for it. I just asked for your opinion. But anyway, not just as a boilerplate reaction. Nothing in the last 2 trading sessions changes the capital structure at Finger Motion. A bounce off an all-time low in a name where the lender may now be entitled to cash the issuer doesn't have is a liquidity event, not a thesis. And you should remember in all these names, any name, if a group of guys gets together, or women, and they hire an investment bank, they go offshore, and they give them $50 million or $100 million to play with, they can turn on the buy computers, and then they can give a trading desk $5 million commission, and they can make the stock go up for a while. Is it going to stay up? Maybe not, but maybe they're going to try. Maybe they're going to try to get it to squeeze. That can happen in any name. Question is, are you going to see it in time to trade it? And do you have the discipline to just get out at 3 or 4 times your money? And if it keeps running, ignore it. None of us, we all get emotionally tied in the moment. We all do. We're human. All right, let's keep going on Finger. So I asked about the recent note that Finger took. The counterparty is named in the note itself. Finger Motion promised to pay Alto Opportunity Master Fund, SPC, Segregated Master Portfolio B, on a senior secured convertible note due May 13th, 2027. The original principal is $5 million. Alto. It's the same Ayrton vehicle you already mapped out in your June teardown. Finger Motion went back to the same well and this time gave up the collateral. So that doesn't sound good. It's $5 million face. They had a $700,000 original issue discount. So $4.3 million received as discounted principal, broken up into 2 parts. $3.3 million landed at the closing. The remaining $1 million was released when the SEC declared the resale registration effective, which happened on June 22nd. As I understand it, what that does is it sets up a bunch of free to trade stock available at the transfer agent. That's how they hedge it. The placement agent took $200,000 in cash commission on the initial proceeds. So out of $5 million they signed up for, roughly $4.1 million of net cash, not including attorneys and other costs, against a $5 million obligation maturing in 12 months. Does that sound good to any of you? I don't know, it might. No interest unless there's a default. If there's a default, then the interest is 12% annually, and the note becomes payable at the holder's election in cash at 125% of the outstanding value in an event of default. So what's 125% of 5 million? I guess I mean, roughly, I guess that's close to I don't know, 6.125 million. I'm doing it in my head. If I'm wrong, it's because I'm bad at arithmetic. It might be 6.25 million. So fixed conversion at 94 cents, but each monthly redemption conversion period, the holder may convert up to 1 million of principal at the lower of that fixed floor, or 90% of the lowest daily VWAP over 7 trading days ending on the conversion date, subject to a floor price which is initially set at 20% of the NASDAQ minimum price the day before the purchase agreement, which resets automatically every 6 months. So that's conceptually, you can convert at 94 cents or at 90% of the lowest 7 days trading volume up to the conversion date based on volume and weighted. And of course, the selling will commence, but it's subject to a floor of 20% of the NASDAQ minimum price, which is essentially that 90 cents or about 19 cents. So if the exchange cap blocks issuance of stock or the floor price condition exists, the holder can require the company to satisfy that month's conversion in cash at a 7.5% premium. I wonder what that annualizes at. So there's 3 provisions. The security agreement grants to Alto, acting as collateral agent, a first priority security interest in substantially all of Finger Motion's personal property. That doesn't sound good to me. It might to you. Doesn't sound good to me. Doesn't really sound good at all to me. But that's the deal. So that's the escalation. And then a subsequent placement redemption right in the contract entitles the holder, Alto, to require the company, Finger Motion, to apply up to 30% of the gross proceeds of any subsequent placement to redeem at 115% of the amount being redeemed. Finger Motion cannot raise its way out. Finger motion cannot raise its way out of this note. Every dollar finger motion raises to survive is 30 cents taxed, 30 cents taxed at a 15% premium back to the holder. The refinancing door isn't closed, but it's metered, and it's heavily metered. That to me doesn't sound particularly good either. It doesn't sound good at all. And then the third thing, there's a company optional redemption available after 40 trading days following the effectiveness, which just occurred, at 115% of the outstanding value. Call it 5.7 million. Cash on hand was 987. The exit exists on paper and nowhere else. Well, frankly, that's one way finger motion can get out of this, is if someone gives them almost 6 million in cash in 40 days, trading days, I guess that's two months, and they buy the whole note out, they can get away from this note. But they got 4 million and they're going to pay almost 6 million to buy it out. Who's going to do that? And what are you going to give to that person? If it's a raise, they've got to give 30 cents of it back. I don't know. I guess there's a small window there that if somebody gives finger motion $6 million almost to buy back the note in 2 months, maybe they can somehow get out of it. I didn't ask that question. I will ask it before we go live tomorrow. So at 94 cents against a 15 cent to 19 cent stock, the fixed price is decorative. Everything routes through the monthly VWAP mechanic, and the monthly mechanic is now pressed against the floor. An exchange cap of 12.2 million shares can't retire 4.3 million at prices anywhere near the current levels. That math needs 25 million plus shares. So the instrument converts by its own terms from shares settled into cash demand on a company with about 5 weeks of cash. 5 weeks of cash. Look, they may do something. They may go down to Puerto Rico and find someone that's willing to give them $6 million. But why didn't that person give them $5 million before they signed the notes? I'm not sure it's reasonable to expect, but as you know, anything is possible. The exact minimum price you got to pin down. And they asked about another date around the 13th. So I pointed out that they have this 19.99% shareholder vote. And the answer came back, not yet, they don't. Where the vote actually stands. What's on file is a preliminary proxy. The special meeting is set for October 6th, 2026, with a record date of August 17th. Record date of August 17th. And mailing on or about August 26th. So the approval remains pending. The proposal is non-routine, so uninstructed broker shares cannot be voted, and approval requires a majority of shares present or represented by proxy. Absent approval or a council's opinion, the company states it cannot issue conversion shares above the exchange cap of 12,256,000. Record date hasn't passed. Ballots haven't gone out. Nothing is authorized. Well, I have a feeling it'll pass. The precedent nobody is pricing. Finger Motion ran this exact play in 2023 with Lynn Global and lost. Proposal 5 on the January 2023 ballot asked shareholders to authorize issuance in excess of 20% of the common stock to the company's primary lender on the 4.8 million convertible promissory note held by Lind Global Fund 2 LP. February 23, 8K reported the results. The authorization to issue in excess of 20% to the primary lender upon conversion of the note and exercise of the warrant was not approved. There were 6,473,000 broker non-votes on that item. It counted for the quorum, but they were not deemed votes cast. So that could happen here. So it's the same company, same proposal, same lender financing structure. Shareholders said no. That is a documented primary source fact. So the time to watch for, the item to watch for on that same 23 ballot sat agenda item 6 to approve lowering the floor price under the note and the warrant held by the primary lender from 86 cents to 50 cents. That was 2023. If a floor price reduction proposal appears alongside the share issuance proposal this time, when the proxy comes out, that tells you Alto has already concluded the floor is binding and asking the company to remove it. So the exchange cap and the floor price are two independent gates. Stockholder approval only opens the first. The floor price condition triggers cash settlement right at 7.5% premium on its own terms. A successful vote doesn't cure it. So here's what the fork is. The fork is Rots of Rook. The fork is the approval passes, so the 12.26 million shares ceiling comes off, and the conversion runs at 90% of the lowest 7-day VWAP into an $11 million market cap with no cap above it. The equity absorbs this selling. If the approval fails, the monthly amount must be settled in cash the company doesn't have. Unless, of course, they get somebody just to give it to them. That path runs to an event of default at 125% of the outstanding value with 12% default interest against a first priority lien on substantially all personal property. Heads, they win. Tails, you convert. except this time the collateral is pledged. So tails, you lose all the assets. Well, I don't think that sounds good. So the mechanics does create supply pressure, but it doesn't run in one direction. The Frenchman is correcting me, as he is wont to do. The classic death spiral grind requires the holder to convert at a discount and sell repeatedly below the floor price. That route closes below the floor price. The holder can instead require cash at a 7.5% premium. So at 15 cents, 19 cents against an implied floor near 19 cents, conversion-driven selling is largely blocked right now. That's not bullish. It just relocates the failure from dilution to solvency. Two different mechanisms, two different chart shapes, dilution grinds, insolvency gaps. Which one you get is decided on October 6th. If approval passes, the 12.25 million cap comes off of shares and conversion runs at 90% of the lowest 7-day VWAP with no ceiling above it. That's the reflexive loop, and it's the structurally downward path. If approval fails, cash demand is demanded and the company can't meet it on essentially $1 million, and you're in default territory at 125% against a secured lender. The vote is the fork, and the 2023 outcome says the outcome is not a formality. So I guess reading this, and I'll have to check tomorrow, maybe somebody gives them almost $6 million and buys the note out. But what do they get? Maybe they buy the whole company and they control the company and then they cram down shareholders. I wouldn't give $6 million without cramming everybody down. So I don't see any way that this is going to be pretty. All right, on the 10-cent rule, and it's tighter than you may realize. The old version truncated the compliance period. The amended rule is harsher. A closing bid at or below 10 cents for 10 consecutive trading days now produces an immediate staff delisting determination, immediate suspension from trading, ineligibility for any compliance period, and the material change, a hearings panel request does not automatically stay the suspension. Finger closed August 3rd around 18 cents. That's roughly a 45% move from a hard trapdoor, the 10 cents, in a stock which just moved 13% downward in a session. That's uncomfortably close. Why this forces a reverse split earlier than the December date. The bid price notice runs to roughly December 29, but management can't safely run the clock to the deadline because 10 closes at or below a dime ends the listing outright with no appeal stay. The 10-cent rule is the binding constraint, not the $1 rule. That pulls a reverse split forward into the autumn. Does that sound good? Is that a reason, like that guy said, to buy it? And note Rule 581C3A4. A company that fails the bid price requirement having effected reverse splits over the prior 2 years at a cumulative ratio of 250 to 1 or more, gets no compliance period at all. Finger motion isn't near that yet, but it's the reason a company only gets to run this play a limited number of times. So the sequence to watch in order: look out for August 17th as the record date. August 26th, there's a mailing. October 6th, there's a vote. Roughly November 13th, the floor is reset. Late December is a bid price deadline, with a reverse split needing to land before that, and probably well before that. The reset is the piece that matters most. A reverse split raises the nominal price. The floor then re-benchmarks at 20% of the then current NASDAQ minimum price. In pre-split terms, that's a materially lower floor. Combination adjustments protect the holder on the way in. That's the note holder. The 6-month reset rearms the discount on the way out. That's the ratchet. And it's why the split fixes the listing problem and the split fixes the shareholders problem are different sentences. So the Frenchman is not going to give me a direction on the stock. Supply pressure and price are not the same variable. The floor does not interrupt the conversion loop, and an $11 million market cap in a stock that turned over half of its float in 2 sessions is capable of moves in either direction that have nothing to do with any of this. What the structure does tell you is that the distribution is usually two-tailed and usually short-dated. Most of the resolution happens between October 6th and December 29th. So I said, will a reverse split save Finger? The short answer is it saves the listing of Finger briefly. It does nothing for the company, and it actively worsens the shareholders' position. Those are 3 separate things, and they get conflated constantly. What a reverse split fixes: the $1 bid price is fixed, and more urgently, the 10-cent trapdoor. That's not trivial. Delisting is usually itself an event of default in secured convertible paper. So staying listed is a covenant matter, and that is as or more important than a prestige matter. It's both, but the covenant, the default, is more important. A split buys time against both clocks. What a split cannot touch: every number on the balance sheet. So you have a $5 million face maturing May 13, 2027, secured by a first priority lien on substantially all personal property. You have just under $1 million, 987,000 of cash against 2,345,000 of quarterly operating outflow. There's an accumulated deficit of 41.2 million and net losses of 7 million. 5.1 million and 3.8 million in losses across the last 3 fiscal years. So 7 million, 5 million, and almost 4 million. It's widening, not narrowing. A reverse split multiplies the price and divides the share count. Their product is unchanged. It's an arithmetic operation, not a financing. The secondary deficiency waiting behind the first. NASDAQ capital market continued listing requires one of $2.5 million in stockholders' equity, $35 million of market value of listed securities, or $500,000 of net income. At an $11 million market cap, Finger fails the market value listed securities test and obviously fails the income test. So it sits on the equity standard, and equity is being consumed at roughly $7 million a year against a $5 million secured note. Does that sound good? Pull the current stockholders' equity line from the July 15 10Q. If the cushion is thin, then the reverse split solves the bid price and delivers the company straight into an equity deficiency that no split can address. Nobody covers that. Why this is affirmatively bad for holders of the common stock. There are two mechanisms, both structural. Firstly, this reopens the channel the floor had closed. Right now, the subfloor pricing blocks discounted conversion. The floor price resets automatically every 6 months at 20% of the then current NASDAQ minimum price. Split the stock 1 for 10, and the November reset rebenchmarks against the new nominal price. An effective floor, an order of magnitude lower in pre-split terms. The split doesn't merely fail to stop the dilution mechanism, it restarts it. Secondly, authorized shares don't shrink when outstanding shares do. The split manufactures exactly the headroom that an uncapped conversion needs if the October 6th vote carries. And it's a consumable, whatever that means. Rule 5810C3A4 denies any compliance period to a company failing the bid price requirement that has effected reverse splits at 250 to 1 for 2 years. So companies who need a second one don't usually get a third. So that's what consumable means. It runs out. The test that doesn't move. A reverse split is not a named, contracted, dated repayment source. It doesn't retire principal. It doesn't extend the maturity of principal. And it doesn't release the lien on the company's asset and personal assets. It doesn't fund the burn. It changes the units in which the problem is denominated. So I said, is a reverse split likely before the vote? Unlikely is the answer, for the procedural reasons rather than strategic ones. They probably need a stockholder vote to do it at all. Delaware requires a charter amendment for a reverse split, which means stockholder approval unless the board already holds standing authority from a prior meeting granting a ratio range. FNGR's last annual meeting doesn't appear to have granted that. The February 26 ballot covered election of directors, appointment of CT International as the auditor, and executive compensation. Swell. No split authority. Worth confirming against the certificate of incorporation. But as it stands, the board can't act alone. Even with authority, the calendar is against it. A company event notification form must go to NASDAQ by noon Eastern Time at least 10 calendar days before the market effective date, and it must include the new post-split CUSIP, evidence that CUSIP has been made DTC eligible. Remember what they said at COSM? And the dates of board and stockholder approval have to be included. Failure to meet the deadline results in a trading halt. And the binding sequencing constraint is that DTC eligibility often isn't granted until after stockholder approval has been obtained, where approval is required. So the chain is vote, leads to board fixes ratio, leads to CUSIP issued, leads to DTC eligibility, leads to 10 calendar days notice, leads to 2 business days public disclosure, leads to effective. From an October 6th vote, that's mid to late October at the earliest, which is conveniently exactly where the lender would want it. The split lands late October. The floor price resets automatically 6 months from the May 13 purchase agreement. Call it November 13. Re-benchmarking at 20% of the then current minimum price, now measured against the post-split nominal price. Vote first, split second, reset third, uncapped conversion into December. That ordering is not coincidence. It's the only ordering that works, and it works best for Alto. The thing to watch, and it's a single document, watch whether the definitive proxy adds a reverse split proposal to the October 6th ballot. So let's see when the proxy comes out if they add a reverse split proposal. My guess is you'll see it there. The preliminary proxy carries the share issuance proposal. If a split authorization appears alongside it, the sequence above is confirmed and dateable. Unlike me, I'm not dateable because I'm washed up. I'm a washed up old fart. If it doesn't, that's the more interesting story. If the squeeze doesn't appear, because then FNGR needs a second special meeting with its own record date and mailing, squeezed in before the late December bid price deadline. That's expensive, tight, and says something about how far ahead the board is planning. They cannot outrun the trapdoor once it starts. 10 consecutive days at or below 10 cents produces an immediate staff delisting determination, an immediate suspension with no compliance period and no automatic stay on appeal. 10 trading days is 2 weeks. The split machinery needs longer than that, even in the best case, and it needs a shareholder vote they don't even have until October 6th. From roughly 18 cents, That's the real question. Whether the stock stays above a dime long enough to vote the matter. So I asked about the floor of 19 cents. First, the 19 cents is this AI's inference, not a filed number. I derived it as 20% of a minimum price implied by 94-cent fixed conversion. You, me, have now used it 3 times as an established figure. Pull the actual NASDAQ minimum price for May 12/26 to compute it to the cent. If the real floor is 17 cents or 21 cents, our conclusions move. Secondly, and more importantly, a floor price is not a bid. It's a contractual limit on the price at which the holder may convert. It obligates nobody to buy anything. There is no capital standing at 19 cents defending the 19-cent level, and there never was. What the floor does is remove a seller. Below it, Alto can't convert and distribute at a discount, so one source of supply switches off. Absence of selling is not the same as presence of buying. And in a stock that just turned off over half of its float, just turned over half of its float in 2 sessions, that distinction is important. Nothing holds. It just stops being pushed from one seller. I asked if it's too alluring, that 10 cents. And they asked back, alluring to whom? Work through Alto's position because it's counterintuitive and it's the part worth noticing. A lower price is good for the holder of a discount conversion note only inside of the band. Below the floor, conversion stops and the claim converts into a cash demand against $987,000, which is the demand for money that doesn't exist, running to default and acceleration at 125%, and foreclosure on first priority lien over the personal property of a company whose operations sit inside a Chinese VIE. That's a genuinely poor recovery path, and everyone drafting these documents knows it. And sub 10 cents is worth still. 10 consecutive days at or below a dime means immediate delisting determination and immediate suspension with no stay pending appeal. Alto's recovery mechanism is selling register shares into a liquid NASDAQ tape. Suspension destroys the exit. The 16,531,931 registered resale shares are worth what they can be sold for. And OTC pink sheet liquidity in a busted China VIE is not a market you unwind $4.3 million into. So the party with the largest economic stake in the outcome wants this stock listed, alive, and above the trapdoor, at least until they get their money out of it. That's their motive. And the thing is, this AI, they never take into account what I think's really going on is that the toad and people like the toad are stealing the entire market cap in very devious ways. Some seem to be legal, but it's a lot of people looking the other direction. All right, we already went over that. All right. Well, I guess the other ones have to download before I can delete those. I'm not trying to pick on anybody at Finger or anybody, but the mechanics of this document are crushing. And I think the opportunity to switch out of Finger into Railtown is unique. It doesn't usually happen that you can get out of one car before it crashes into another car that takes you down the highway. That's where I asked the question if it's alluring, and we read the answer. The short side is the only obvious beneficiary of the trapdoor, and covering becomes difficult. The floor provides no bid, the 19 cents. The trapdoor is roughly 45% away. That's the 10 cents. The machinery to escape it requires a vote that's 9 weeks out, and the largest creditor's interests point up rather than down. Whether 19 cents holds through October is a flow question in an $11 million market cap. And flow is the one variable in this whole file that isn't written down in a filing anywhere. And I wrote, I'll never convince you about Alto's recovery, which may well be in conclusion with, say, the Anson funds, maybe, and all manner of monkey work. It's hidden, it's illegal, it can't be asserted, and you cannot see it. But all of the evidence is shown in stock prices and in some lawsuits. It does happen. In my opinion, the Anson funds and others swiped the entire market cap of Finger Motion by selling shares that never existed. They did it in volume over time. The note is a hedge. No one looks, no one cares, no one finds anything. Life is such. So the Frenchman comes back and says, you're not quite right. Naked shorting is real. Anson has settled with the SEC. Ireton Anson co-investment overlap across a set of issuers is a documented, mappable fact. You already built that map. I did. I was going to write about it, but I pulled back on filing anything on Substack about Finger because I didn't want to be, seen as taking on anybody. There's a lot of good people in Finger. But I have said over and over and over again live, I've expressed my views. Coordinated undisclosed short and convert arrangements have been the subject of real litigation with real outcomes. None of that is something I need the Frenchman convincing of. And I haven't argued otherwise. But where I'd push back is narrower. The evidence is in the stock price. That's one step I don't think holds. And it hurts your argument rather than helping. A $32 million market cap going to $11 million market cap is fully explained by things already on the record. A company that lost 32% of its revenue in a year, with gross profit collapsing, 41.2 million of accumulated deficit, 5 weeks of cash, and a secured convertible whose registered resale shares are legally in the market. They're already in the market. When ordinary causes are sufficient, price action can't distinguish between diluted and failing, and diluted, failing, and also being naked shorted. Both produce the same chart. Okay. And why no one looks, no one cares, no one finds anything isn't actually where things stand. Because it's the fatalism talking rather than the reporter. All right. Excuse me for being fatalistic. Excuse me. Have to wait a minute. Okay. Things that would be discriminating and should get a look at are persistent FTDs, threshold list appearances, and settlement data. And that's why you flagged the weekly short interest publication and FTD allocations reports, which I did. I never published it with an August 14 deadline 10 days out. So the honest position on FNGR specifically is, I can't rule out what you're describing, and neither can you, from what's currently observable. What's observable is a note structure that is punitive on its own terms, and a company that fails the FAR bank test. I think the freshman is talking about the left bank test, no? Regardless of who else is in the stock. That story is fully documented. The other one isn't yet. Where I'd actually put the effort, Alto's position is disclosed and dated. Any hedging via a coordinated short would have to leave residue in settlement failures around the May 13th closing. All right, I'll pull those files. It suggests that I should. I'll pull those files. So I said FNGR was at several points a $250 million market cap. And the answer is that's the right place to start the clock. And it's a better story than the one you've been circling. Take the arithmetic seriously. At the peak, FNGR had a market capitalization somewhere between 250 million and 370 million, depending on which print you use. And an S3 on file registered 300 million of new shares and warrants plus 25 million under and at the market facility, with Univest Securities running the books. Now look at what actually was converted into balance sheet cash across the whole subsequent arc. A December 24 raise of 3.3 million shares worth $5 million, with 5 million warrants at $1.50 combined, roughly $5 million. That's December of 24. Then 18 months later, 3.3 million at closing on a $5 million senior secured note with a $700,000 original issue discount secured by a first priority lien on substantially all personal property. So it's a $250 million market cap and a $325 million shelf. And the company ends up pledging its assets for $3.3 million. That's the provable consequence, and it doesn't require anyone to have done anything hidden. What was or wasn't happening in the settlement plumbing, the documented failure is that enormous paper value, which existed and was never converted into funding while it was there to convert. And this is an argument I made about 1.5 years ago. Sometimes CEOs have to take advantage of their high price and convert it to funding. But that's when you rely on the quarterback. That's why some quarterbacks win. And some quarterbacks get demoted. And the reason it was always going to end here is one number: gross margin of 4.59%, gross margin of 4.59% on trailing 12-month revenue of 16.3 million. Finger booked 35.6 million of revenue in fiscal 25. Real revenue, real carrier relationships, never a shell. But reselling telecom top-ups at 4% spread produces turnover, not cash. The revenue line was doing promotional work. The gross profit line could never support. That's the gap. The $250 million was priced into. And it's the gap that made the company permanently dependent on financings, which it kept getting on worse terms. Pull the full drawdown history. All right, I'll try to do that. I didn't do that. I said, who is the placement agent? It was Wield & Co. Wield & Co. acted as the placement agent and will receive $200 million in cash, separate from the notes OID. That name will mean something to you. David Wield IV. It's better than the Toit. A former vice chairman of NASDAQ, the most cited advocate in America for the argument that market structure has been strangling small cap issuers, the man whose research underwrites half of the reform arguments you and I have been discussing for weeks. His firm placed the note. Placing a financing is legitimate business, and I'd report it as exactly that without adjectives, but it belongs in a piece. Source to the 8K stated flatly. Now the arithmetic. And yes, you have spotted the collusion. 20% of 50 cents is 10 cents. That's the same number. So in other words, if the NASDAQ minimum is 50 cents, it's the 10 cents blowout number. But they're the same only by coincidence. NASDAQ's dime is absolute and permanent. It never moves. 10 consecutive closes at or below 10 cents, and the security is suspended with no compliance period and no automatic stay. The note's floor is relative and re-derives. it resets automatically every 6 months. Of course, the note's only out for a year. So it walks downward as the price walks downward, which produces the structural absurdity worth naming. One line is fixed, the other descends. At 50 cents, they meet. Arthur, what happened to us? We used to be so happy, Arthur. What happened? And then we met. Below 50 cents, the reset floor passes underneath the trapdoor, meaning the contract would permit Alto to keep converting at prices which the stock cannot legally remain listed on NASDAQ. The instrument's economics stand into territory the exchange has declared uninhabitable. And this is why the reverse split is the lender's friend. A reverse split is the lender's friend, not the shareholders. Run it. A 1 for 10 from 18 cents gives you $1.80. The November reset then benchmarks against that number, producing a nominal floor around 36 cents, comfortably clear of the dime. Listing preserved. But at 36 cents post-split is 36 cents pre-split, huh? But 36 cents post-split is my eyesight. But 36 cents post-split is 3.6 cents pre-split. The split moves the floor away from the trapdoor nominally, while moving it down by an order of magnitude economically. Both parties get what they need from the same corporate action, and only one of them is getting value. You can't always get what you want. So I said, okay. So they pulled the note. So the floor is actually 81 cents. So the floor price at 20% is lower than 19 cents. It's flag 81 cents does not reconcile with its own formula. That's actually in the document, I guess. 20% of a minimum price implies a minimum price of $4. Finger's 52-week high was $2.2. The stated figure and the stated derivation don't agree. Anyway, it's a legitimate question, but we won't go into it. So the redemption conversion price shall not be less than the floor price. With the floor at 81 cents and the stock at 18, Alto currently cannot convert at the market, which is probably why they got the machines going up today. The share settled path has been closed since roughly mid-June. A floor price condition exists when the redemption conversion price is below the floor price for 5 or more trading days out of any 7 consecutive trading day period. I'll have to look at that again. That is bloody confusing. Let's just keep going because I don't think it matters to get bogged down. The only cure is a 6-month reset. So the holder may require the company to redeem in cash, plus a 7% premium payable the last trading day of the applicable monthly redemption conversion period. So it's up to $1 million of principal per month at $1,075,000 in cash and they have less than $1 million on hand. Every month since June at Alto's election. So there's a buried provision in section 7CI, minimum cash covenant. The company's available cash on the last day of each calendar quarter shall be greater than or equal to 1.0 times the average cash burn. In any case, available cash shall never be less than $500,000 at any time. So the average cash burn currently is the negative change in the average cash over the trailing 3 months divided by 3. So if you run those numbers, quarterly outflow was or is 2.345 million, and it gives an average cash burn of 782,000 per month. So you're required to keep $782,000 in cash. The actual cash on hand is 987,000. So the covenant cushion currently is roughly $200,000. And the next test date is 4 weeks out, August 31. And the 500,000 hard minimum applies at any time, not at the quarter end. If you breach that, an 8K is required within 4 trading days. Takes a while to download for some reason. So let me just see if there's anything in the news. Okay. So here's more. Here's the events of default, section 8A15. It is an event of default if Martin J. Shen ceases to be chief executive officer and no reasonable replacement acceptable to the holder is appointed within 90 days. Alto holds an effective consent right over CEO succession. Section 8A11. A trading market default includes the threatened failure of the common stock to be listed if not cured 45 trading days prior to the deadline set by such trading market. So in other ways, 45 trading days before the late December bid price deadline is actually roughly late October. The listing default fires 2 months before the NASDAQ clock does. So on a default, the alternative conversion price is 80% of the lowest daily VWAP over 7 trading days. And during the event of default redemption right period, the holder may convert 125% event of default redemption amount at any price, at that price. Default doesn't just accelerate, it marks the claim up by 25% and simultaneously widens the discount from 10% to 20%. And the escape hatch is one directional. The company may voluntarily reduce and only reduce the floor price in its sole discretion by providing written notice to the holder. No vote required, no NASDAQ approval. A board resolution and an email. If Finger lowers the floor toward the market, conversion reopens and the cash demand goes away. By converting the solvency problem back into a dilution problem, at management's sole election. Do you want to be an equity holder here? Watch for that notice. It would be the single most consequential disclosure in this whole sequence, and it can be issued any day. I asked if the board's duty had shifted from equity to debt holders. And of course, I get the wording wrong because I'm not a lawyer. In Delaware, the answer is no. There is no duty shift. The zone of insolvency theory, which traces back to Chancellor Allen's footnote in Credit Lyonnais in 1991, was substantially repudiated by the Delaware Supreme Court in North American Catholic Educational Programming Foundation v. Giwala in 2007. The holding: creditors have no direct claim for breach of fiduciary duty, not even when the corporation is actually insolvent. What insolvency changes is standing, not duty. Creditors become residual claimants and may sue derivatively, in other words, on behalf of the corporation. The duty itself never leaves the corporate entity. And then there's Quadrant Structured Products against Vertin in 2015, and it sharpened it further. Directors of an insolvent corporation may still pursue risky, value maximizing strategies, even where those strategies favor equity over creditors. And the business judgment rule still applies. Trenwick has already rejected, or had already rejected, deepening insolvency as a cause of action in Delaware. So Finger's board owes what it always owes: duties to the corporation, not to Alto, not to you, separately. So the company shall not incur indebtedness beyond permitted indebtedness, capped at $500,000 unsecured, without the prior written consent of the collateral agent. So if they raise $6 million, it can't be debt unless they agree. It shall not incur any liens. It shall not repay other indebtedness. It shall not dispose of assets outside of permitted dispositions. It shall not form a new subsidiary unless that subsidiary grants security. It shall not enter any new line of business. It cannot replace its CEO without a successor acceptable to the holder. And any capital it does raise, including through an ATM program, is subject to the holder's right to claw 30% of the gross proceeds at 115% premium. Borrowing, lending, selling, restructuring, hiring the chief executive, and raising equity. Every meaningful lever a distressed board would ordinarily pull now requires a counterparty that owes Finger shareholders nothing whatsoever. The board kept the duty, and the note holder took the levers, took the options. The contract did what fiduciary law declines to do. The company may reduce the floor price in its sole discretion by written notice. That is a unilateral board act that converts a cash obligation into share issuance, diluting existing holders without a vote and without exchange approval. Under Delaware law, it's almost certainly protected by the business judgment rule if the alternative is default. A board choosing dilution over default is doing exactly what quadrant the case permits. It's not a breach. But the quality of the disclosure is important. So the lien that covers all personal property of a Delaware holding company like Finger, whose operations sit in the People's Republic of China as a variable interest entity, has never been tested in China, in a Chinese court. So Alto has a better chance of getting their money back by selling in the open market. But as you know, I believe companies like the Toad are in the background and have been in the background for several years and possibly have stolen $200 million, $300 million out of the market with their stratagems. And you can't prove it all. I can't prove it. And therefore, it's just opinion. But that's Finger. And I'm going to keep going. I'm going to answer some of your questions, but I'm going to take a quick break because that was long for me and it might have been long for you. Let me just see if there's something, because I think I had one other thing I wanted to show you. Oh, here. There's a little bit of talk on the yen crisis that you can listen to. But here, I want to summarize. If you own Finger Motion and that doesn't fill you with trepidation, you still have 25 cents left. Put that 25 cents out of the car that is clearly crashing. There might be one small exit, which is if somebody gives them $6 million in 2 months to buy the whole thing out at a premium. But what would the $6 million get? Probably the whole company. 85% of it. It's tough. So I think you should take advantage tomorrow, all week, of moving Finger Motion to Railtown. Even if you don't fully understand the Railtown story, rely on the fact that we have about 300 people here who own 24 million shares of Railtown after they almost all did extremely powerful due diligence. And I'm going to turn this
All right, Alexander, let's talk
to
about
these
what is
guys
happening in Japan
while I take a break.
With the yen. The U.S. central bank, Besant, and the Trump administration, they appear to be working with the Japanese central bank. An interesting development.
Very interesting development. Now, the thing to understand about what has been going on and why they've done this is because we have been witnessing over the last few weeks a decline in the value of the yen. The yen has been falling on international markets. And the Bank of Japan, in order to support the yen, has been selling treasuries, US treasuries, of which it has the world's biggest stockpile, by the way. Now, the United States, especially at this time, does not want countries to start selling treasuries because it doesn't want to issue more and more treasuries, and it doesn't want too much of a market in treasuries because, as we know, US debt levels are very high and US debt payments are increasing. So in order to stop Japan selling treasuries, the US intervened to help the Japanese central bank support the yen. And in order also not to weaken the dollar itself by spending dollars buying yen, spending dollars that the United States has to buy yen. What the US has been doing is it's been selling from its stockpile of euro assets. So they've been selling, in effect, euros to buy yen. A very interesting maneuver, the kind of maneuver that Scott Bessent, who is, of course, the US Treasury Secretary, is a master of. But the ultimate purpose of it is to prevent a big sale of treasuries and at the same time just not to weaken the dollar.
All right.
Is this going to
I can't play the whole thing, I don't think, but you can watch them on their channel, the Duran. Okay, let's go to your comments. Let's go to your comments. T. Alex. BC Facilities, TELUS and real estate developer West Bancorp are rolling out the cluster in 3 distinct phases, leveraging an 85 megawatts of clean power from BC Hydro. T. Alex. This facility is scheduled to go live within weeks. So that's look, if we get to see it, great. But institutions are going to look under the hood, and if Railtown is there, they will see Railtown there. They'll first ask, "Hey, can we invest in the company?" And then when they see it's public, that's how they'll do it. So the facility is scheduled to go live within weeks to provide immediate computing relief. I wonder why they need computing relief. Is there a shortage? Vancouver, Mount Pleasant, M3 building, located in 111 East 5th Avenue. This 6-story office conversion will see an initial launch at the end of 26, gradually expanding its footprint through 28. Growth. T. Alex, downtown Vancouver, slated to be the largest site at 400,000 square feet. This purpose-built facility will come online in 2029. T. Alex, the total cluster is engineered to scale past 150 megawatts and 60,000 NVIDIA GPUs by 2032. T. Alex, how the federal sovereign AI funding works. The federal government is injecting $2 billion into the domestic artificial intelligence sector through the Canadian Sovereign AI Compute Strategy. T. Alex, rather than directly building data centers itself, Ottawa divides this capital into 3 strategic layers. T. Alex, the data center build layer, up to $700 million. This fund targets T. Alex. This fund targets commercial infrastructure projects. TELUS and the Government of Canada signed a sovereign MOU to explore how these BC sites can officially integrate with this layer. T. Alex, public supercomputing infrastructure, $1 billion, spent on building state-owned, highly secure supercomputing clusters managed by institutions like the National Research Council for Security and Public Research. T. Alex, AI Compute Access Fund, up to $300 million. T. Alex, a subsidy fund, interesting word, subsidy fund, designed for small and medium enterprises. The government directly covers 2/3 of the cost when a Canadian startup purchased computing time from domestic providers. Wow. Great find, T. Alex. So there's a fund of $300 million to subsidize the AIP network if they buy their compute from TELUS data centers. They subsidize 2/3 of the costs. Wow, that's a big research. Ward Richardson. T. Alex, nice research you have here. Well done. Bravo. Ward Richardson, the All-In 2026 will be held September 16th and 17th. Wiser AI Systems will be attending. Wiser AI Systems is recognized as one of the top 100 startup companies in Canada. Harbison, don't let the haters get you down, William. Don't give them airtime. Yeah, it's always in the back of my mind. I don't know how to handle it. I thought Lion of All Trades was a good person in many interactions with him before. But the thing is, Harbison, what I notice is when, because there, there's the Toad. There's the Toad selling hundreds of millions of dollars worth of stock over a couple of years. But then there's these short sellers, and they don't have any more dime to rub together than I do. And they get in trouble. They hire these people to come. What they want is to make me look ridiculous. And a man in my position cannot be made to look ridiculous. Johnny is never going to get that movie. I don't care what. I forget what he said. What Dago Wop attorney they send up here? Well, actually, I'm German Dutch. I forget what they said. All right. No, German Irish. My Mick Kraut friend. I forget. What an amazing scene. And what was that guy's name? Hagen? Tom Hagen? It's so bad. I only have the one client. Ouch.
Sent by a friend of Johnny Buck. His friend is my client, looking his undying friendship for Mr. Walsh. Mr. Walsh would grant us a small favor. All good listening. Give Johnny the part of new war film you're starting next week.
And what favor would your friend grant, Mr. Wolf?
You're going to have some union problems. My client could make them disappear. Also, one of your top stars has just moved from marijuana to heroin.
Are you trying to muscle me?
Absolutely
Now
not.
listen to me, you smooth-talking son of a bitch. Let me lay it on the line for you and your boss, whoever he is. Johnny Fontaine will never get that movie. I don't care how many Dago Guinea, what greaseball goombas come out of the woodwork.
I'm German-Irish.
Well, let me tell you something, my proud Mick friend. I'm going to make so much trouble for you, you won't know what it is.
The wall's come a lawyer. I have not threatened.
I know almost every big lawyer in New York. Who the hell are you?
I have a special practice. I handle one client. Now, you have my number. I'll wait for your call. By the way, I admire your pictures very much. Check them out.
Actually, I'm German-Irish. Well, all right, my kraut Mick friend. Jack Hamilton, getting caught up. Good evening, Mr. William. Jack Hamilton, we get a green day and the turds come floating out. I'll try to give you crap. Thank you for staying strong. Well, I think it could be that some of these guys are in a little bit of, look, when they're in trouble, it's not massive. They just don't want to lose money. They try to make $500,000 and, you know, they've got to get you thinking that I'm washed up and a kook. And hey, what they don't know is I can do a good enough job of that myself. But on the other hand, collectively, we have done the due diligence here. And we're acting as a cohesive, small, but focused hedge fund, technology fund, private equity group. We've done the work. Jack Hamilton, sorry, voice to text. The turds come floating out to give you crap. Shouldn't have said it before I proofread it. Don't worry about it. I make so many mistakes when I don't even use the voice. I'm typing and I make mistakes. Always thank you for your time, sir. All right. I'm debating because my mind is drifting, frankly, to our gold company. Many of you invested in the gold company directly, and many we did it in our fund. And I think it's going to be good, but there is one concern I have. And it's not bad. It's just it's magnitude. It's not. But I guess I don't want to talk about it out loud. So, but it's on my mind and it's distracting me. I'll try to keep going. So what I just did was a long, and it's boring, I know, but just showing why I'm so alarmed about what's going to happen to shareholders in finger motion. And I've been alarmed since the beginning of last year. I've been in particular when, frankly, they didn't take a financing when the stock was higher in order to fund the C2 contract. That's the summary. And I said it back then. But they didn't. I think that was, personally, I think that was bad judgment. and maybe amateur judgment. You know, their stock was $5. Why not go do an offering for 10 or 15 million dollars at $4, or $20 million at $4? Even if it were a crappy offering. But use the 20 million to go build out the C2 contract. But the thing is, I'm not sure the C2 contract was ever what it purported to be. So there's two sides of it. It's the mortgage, but it's also, what are you going to do with the house? Are you going to renovate it? Are you going to renovate it quickly? Are you going to do a luxury, or are you going to break it into student housing, or are you going to do a mother-in-law suite? What are you going to do with it? What's the value once you get it done? Are you going to do it on time and then you're going to flip it for what price? Or are you doing it to live in it? If you live in it, are you going to have enough income down below to refinance it? The mortgage is one thing, but how you use the money is another. And in what time frame? Let me see what I have here. Yeah, all right. Let's go through these. These are things people sent me, and you know, we can talk about it. It's 7:25. I think I'll quit at 8 o'clock. I'm really distracted by what thoughts are going through my mind. Okay, here we go. This is Railtown. And what I see on the chart here, this is just what I see. In the yellow is a trend line. That's what I see in the last 2 months. I could be wrong. Within it, I don't know if you can see it, within it, I drew a blue line sort of on a diagonal that used the bottom purple line. I think, and this is definitely me being rose-colored glasses probably, but I think that is a declining wedge if you squint hard enough. That's a bullish pattern if it's true. I might be wishing it there, so I didn't emphasize it. But in this channel, we've bounced off it several times and rallied to the top. So my point, if we can break out above 24 cents, 25 cents, I think the next area we go to is here at the 28 to 30 cent level maybe. But I think my message here on Railtown is we're on verge of a breakout. Now, if you do it by that wedge I drew, I don't know if you can see that blue line that's kind of right here. We already broke out. If I drew that one correctly, we already broke out. So the stock came down here, right here, and it made a higher low, not a lower low, made a higher low. If you ignore that spike, it essentially made a higher low because I think there's trading below these prices. Where do I think it could go if it picked up steam? Well, we got to get through these numbers, 25, 30, and then 42.5 roughly. And then, maybe 60, 62 holds something. But I really don't think that there's going to be much resistance on the way up. What's this one? Oh, this is finger. This is finger, and it doesn't tell you much. I think every yellow line I drew, yellow, blob, every circle in yellow, that's probably where it should have been sold. Every time it rallied and broke down below the moving averages, but then it rallied back up. That was a trade you could have done. And then it sells off, then it rallies back up, then it sells off. Then it rallies back up, then it sells off for a longer period. Then it rallies up. But then with the note where I highlighted, it's not so much, I think the note was actually in May, but it was announced in June. I can't remember. But essentially, that might have been when the S1 was approved. Anyway, with that volume and it broke down, that was all she wrote. That was all she wrote. And she's come down here. It bounced off the bottom of the page, but I really don't see a thing that can go right with this stock from a chart standpoint. But remember, anything can happen. If you get buying out of the blue, you get a dedicated group of guys, particularly offshore, trying to make it go up. You can catch the sell side machines off guard. So any one of these names that have been destroyed can have an event upward. But man, unless you get the phone call, how are you going to know when to trade it? All right, this is finger for 5 years. And the key thing with finger for 5 years is if anyone got in back here in December, 3-4 years ago? This stock has completely round tripped. There must have been a split in there at some point. But this is completely round tripped. That's the purple line. It took, my opinion, the Anson funds and friends, it took them 4 or 5 years to do it. They lost money on the way up, but they reveled in that. They brought it down. It ran up, they reveled in it. Ran up, they reveled in it. And they walked this down. They had a machine going for 4 or 5 years. And I think they probably took $100-200 million out of the market. Can't prove it. It's just opinion. But it round tripped completely. And if you're still in finger motion, what the hell? What the hell? This is hopeless. Just to get back up here, I think you need 2x, 3x. The good news about finger motion is for the exact same price, you can get into this stock, which I think's broken out or is on the verge of it. Of course, this is only a 1-year chart or even a 6-month chart because of the way something printed. You can't really, I'll show it to you. No, that's not it. I guess I didn't take a picture of it, but I can't do a 5-year chart on it for some reason. I think that's this one. Anyway, this is a 1-year chart. So this is about to break out. Not only is there hope, I think you can triple your money just on this breakout. I don't know. I don't know what you're waiting for. This ain't pretty, my friends. It not only round tripped, it broke below it. I don't know what you're waiting for. And you have a chance to go over to a better situation, unit for unit, without losing number of units. All right, what's this one? Oh, this is next trip. I find this one interesting. Again, it's how I see it. The green wedge, I see that as a declining wedge. I almost drew it all the way to the middle of the page, ignoring that spike. But I see that as a declining wedge, and it's very bullish. Very bullish. If it breaks, it could go. Yeah, I'd have to count all those boxes and then count it up, but it could go to $4 or $5 if it breaks very quickly. In purple, I tried to do a more narrow wedge, and it's broken out from that more narrow wedge, but I think I'm getting too cute by half, so I did that in a small pencil width. Now, what I think on next trip to be safe, but that doesn't mean if you want to trade it, I think it's a good trade. But to be safe, I'd like to see it break out of 220. And then I just think it runs. But if it breaks right here, and if I'm right on this green wedge, if it breaks $1.81 or $1.85, you got a huge move up in next bridge. Sorry, next trip. Next trip is the stock. Next trip. I'm tired. You can see that I'm tired. Yeah, this is the 5-year on next trip. Very hard to see anything here. I do think in the green there's a wedge there, which has some duration and has some power. But again, I think I'm using a bit of a fat thumb to draw it. However, there's also the channel with the blue, the parallel. And again, it gives you kind of the same number. If it breaks out at $1.80 to $2 or so, and then you might have a little resistance here at 290. But look at all the upside. I don't see any resistance over here. None. Now this very top here, you might argue there's going to be resistance, but I don't see any significant resistance here. So I think it's a hell of a thing. This is total metals, and that chart doesn't tell me anything. The reason why is this one trade all the way down here, it confuses it all. So it doesn't tell me anything. But using the shorter term chart, this is total metals again. It's that one trade right there. It makes the whole thing looks, you can't really read it all. So I just wanted to show you why on total metals I used a 6-month chart. It's all I could use is a 6-month chart. And that's all I could see there is a channel. And it's descending. I couldn't really see a wedge, although, you could try to. But anyway, if it breaks out of that top blue line, which is roughly, I don't know, 16 cents, 17 cents. I think the first resistance might be here at 26 cents and then at 34 cents. But clearly, the biggest stopping point that the computers will stop is around 40 cents. But to go from 14 cents to 40 cents, you can put an investment on, you could sell half, take your original money off, put it into Railtown, or sell a third, or sell it all. But I think once the drilling program starts on Total Metals, the stock's going to break through those numbers. All right, so this is stuff that was sent to me. I don't remember what order it is. So this is the description of the chart you're about to see. Is it a breakout for gold or a bear rectangle? Well, the next short-term move of $200 or so is likely decided by the Fed meet, inflation, and the Bank of Japan. The 4,100 to 3,900 per ounce was and is a key buy zone. But savvy gold, silver, and mine stock bugs also need to be ready to buy if there is a disappointing dip that sees gold trade down to another key buy zone of 3,500. The good news is that odds still favor a surge to 4,400 and then 5,000 rather than a demoralizing drop. You know, I don't have any basis for what I'm about to say. I'm all for gold and silver. But these paper markets control everything, and demoralizing drops are in their DNA. That is in their DNA. And so it might work in our favor if it happens. This is the GDX chart, and it's about to coil. I'm not going to bore you with reading it. Okay, here's one of the charts. So this is gold versus NASDAQ. And Riddler down here says, this backs up your $13,000 gold target, $13,000 gold target. Here's a zoom in just on that chart. So from 1993 in this ratio, the NASDAQ won till 2001. Do you see that? When gold dropped? And then it rotated in the crash. And then in the great financial crisis, and then under Helicopter Ben, gold essentially went up, although it had some time, a whole year of going sideways or two. And then under Helicopter Ben, it rotated, and the NASDAQ's been winning ever since till breakfast at Biden's. And then in a big sweep, gold started winning again, but it's had a pullback. And if this interpretation is correct with gold prices, you're going to get phenomenal runs. Now, here's you see the line they drew? That's what they were commenting on. I'm not going to bury you with that. Here's the 30-year government bond yields. And where I put in blue is a breakout. It points to this yellow circle. So for 30 years, well, I don't know if it's 30 years here. This goes back to 1988. But basically, for most of you guys' life, we've been in a bull market in bonds, bull market in real estate, bull market in everything. But it broke out here in a bad way. So that I can't point to it, but where that red arrow goes, in 2022, it broke out. Forget the last 40 years, rules apply. So for 40 years, there's been a bull market in the bond market, the 30-year bond yield. And according to this analysis, it was a breakout. And then that high pennant up there, if that breaks out, the bond market destroys the stock market. And gold, you can imagine what happens. Now, initially, high interest rates help other investments. So people take money out of gold and go get the yield. But the inflation and the nightmare. So anyone investing with the same expectation as the last 40 years is in for a shock. The coming years will be nothing like the 1980 to the 2020 era. And that's what I'm telling you. And people investing in investments, whether private or public, thinking that the last 40 years are going to be what you're going to experience in the next 5, 10, and 20. It's not going to be your father's Oldsmobile. I know I'm old and washed up. I know. I'm an old fart. So gold and silver sold off today because 30-year yields were spiking. So the market thinks the Fed will be forced to raise rates. That's the chart we looked at just now. So now they're talking about the contracts and 38,000 contracts. Look, the paper rules the price. And while China lets that happen, they can manipulate it. But if China ever breaks that, and they will, gold will find its price and it will be rapid. And that's why you want to be in the mining stocks. Here, national debt jumped through 41 billion yesterday. 41 billion. So in order to pay the interest on that debt, it's the biggest item. It's bigger than defense. $2 trillion a year in interest alone. And the important thing here is as long as we can print our dollar, because we have seigniorage, it's just printing more money. But as soon as oil is priced in rubles, yuan, gold, we'll have to earn that money to pay it. And our lives change. Our lives change. Your government has run up debt, and the banks have benefited from this, to 41 billion. Our GDP, to my memory, is around 33 billion. That's trillion, by the way. It shouldn't be billion. It should be trillion. Trillion, not billion, trillion. Our GDP, I think, is 33. So we're like 120, 125% of our GDP. This number will go higher if we stay at war. And it will go higher if there's a Wall Street collapse. But you cannot invest complacently anymore. The next 5, 10, 15 years are not going to be like 1980, 1990, 2000, 2010. This is from Chris Lecoisier. Somebody else sent it to me, though. He didn't send it to me. Fora Travel is going to IPO, worth $2 billion based on travel agent platform. And he says it's unbelievable. NextTrip's new AI travel platform blows it away. Of course, that's opinion until we can prove it. Designed by the man who built Hyatt and Hilton's platform. Launched in August of 26. So that's new event that hasn't been reflected yet in the price of NextTrip, potentially. Experian and Booking, I guess, want NextTrip, I guess. I don't know. And then Chris says, in my opinion, NextTrip gets bought out at $4 billion in 2027. I think Chris has the same disease I have, seeing high prices. But I think Chris knows this story cold. And if that's what the fundamentals say, that's the right due diligence to do. This guy down here says he downloaded it and bought a lot of it. All right, let's just keep going. All right, gold is coiling according to bar chart and ready for a big move. The Bollinger Bands are now the tightest since August 25, right before gold soared 60% over the next 5 months. Well, that may happen, but the thing is they can break down too. But the Bollinger Bands, hey, who can doubt a Bollinger Band? It's possible. And here's the spider. If it breaks out, it's a bullish pattern. On the other hand, if it goes sideways, that's like breaking down. I don't know. I kind of hope gold takes some time while we build our position in total metals. Remember, Atrium has a research report on total metals with a target of 60 cents Canadian. But I'll save that for tomorrow because I got tired. I shouldn't answer. I think Harbison's right. I shouldn't answer those questions. I might right now, if it's not too much, I put in Chris Laquassier's point on what time is it? 7:51. Should I save that for tomorrow? All right, I'll cut it in half. I was going to read to you a Forbes report on this, is it Flora or Fora? This travel agent company that apparently is worth $1 billion. It's got a beautiful website. It's got a great write-up. But instead, I'll skip that for tomorrow. But today, I know Chris was here yesterday. I hope he's not watching today. Because I'm going to read to you his write-up. He wrote up on NextTrip, and I think it's pretty good. But then I asked, who did I ask? I asked one of the AI services what they thought. And there was some criticism in the analysis. So what's, to me, news story, new due diligence. You hear the good, you hear the criticism, and you try to see what makes sense. So it's only a few of these. I think I'll go through it and we'll finish up there. There are no comments. So Chris wrote about NextTrip travel. And he said the industry has not changed in a decade, and you can follow him on X. Nextrip has spent several years developing a travel, media, and commerce ecosystem that differs from the conventional online travel agency model. Agentic AI, hey, Agentic AI, revolutionizing the way consumers optimize a seamless booking experience from watching to traveling. Recent revenue growth shows that management's build out phase is transitioning into a monetization phase. So that's good news. He's very good at listing the risks, so we'll get to the risks. Summary, Nextrip has spent several years developing a travel, media, and commerce ecosystem. Recent revenue growth shows that management build-out phase is changing to monetization. The acquisition of YADA introduces creator commerce and TikTok-related capabilities, with revenues already booked in the deal and millions in potential high-margin ad revenues. This fast-expanding customer acquisition channel will pay dividends. Russell Microcap Index inclusion may increase institutional visibility. That's interesting. The opportunity is compelling, but investors must evaluate potential upside against dilution risk. And I think, frankly, we've got to tear apart the Lynn deal, which we've talked about a bit. But I want to compare the Lynn deal maybe to the Finger deal, for example. Execution risk and the company's early stage financial profile. So I give credit to Chris. He points out. So here's the thesis. He says, as a value investor, my forte is to find an opportunity before Wall Street does. As we all know, those that invest when there is doubt and skepticism in a paradigm shift company, are those who reap the reward of potentially many multiples on investment. Readers should understand, before I invest hundreds of thousands of dollars in a company, I do literally months of research that includes sitting down with management on multiple occasions. Thank you for taking your time to read my thesis. So Chris continues, I've owned shares of Nextrip, NTRP, for roughly 18 months. During that period, I closely monitored the company and engaged directly with management several times. As a long-term value-oriented investor, I am generally skeptical of microcap companies that emphasize vision over tangible results. This aspect is what makes Nextrip particularly interesting to me. This is a company executing, not dreaming. When I first started researching the company, I viewed it as a small travel company trying to compete in a crowded industry dominated by much larger players. I assumed that the company would eventually face the same challenges as every small online travel agency. In other words, rising customer acquisition costs, limited differentiation, and competition from companies with vastly larger marketing budgets. However, as I continued to follow the company, it became progressively evident that management was attempting to build something distinct. My first conversation with CEO Bill Kirby was one where he noted, quote, "We are about to disrupt an industry that hasn't changed in 2 decades, unquote. That got my attention. So it's a different approach to travel. The online travel industry has changed little over the past 2 decades. Consumers search for a destination, consumers compare prices over various platforms, and they make a reservation. Expedia, Booking Holdings, and other major players have become extremely efficient at that process. NextTrip is pursuing a different approach. Rather than focusing exclusively on the transaction, management appears intent on controlling a larger share of the customer journey, from inspiration through booking and future loyalty. A traveler may discover a destination through journey, spelled JOURNY, programming, engage with travel content, interact using online platforms, utilize AI-assisted travel planning tools, access booking technology, and still have access to live travel professionals when human assistance is needed. No other company is attempting to integrate travel content, media distribution, booking technology, creator commerce, AI-enabled planning tools, and human travel services within a single ecosystem. However, this approach does not guarantee strategic success. It does greatly differentiate the company from its competitors. And I would point out that same build out using AI, using all of that, is the same thing which I saw in a technology company in oil and gas. I believe is happening in Railtown. I don't know the magnitude. We'll learn that. But the thing to remember is if a visionary group puts it all together and builds it, obviously an Expedia or a Priceline could come along and build the same thing. But typically, just like in oil and gas or in technology, like SpaceX did with Cursor. SpaceX could have built out Cursor, but they just spent shares that they had and they bought it and it's done. And they instantly changed the dynamic of the competition and they have their footprint and I think they're generating revenues in SpaceX because of that. But the point is, the big companies will buy these smaller companies. It happens all the time in oil and gas. I never understood why. Why is Exxon buying this company? They could have built it out themselves. And the fact is, there's not enough people resources. There's not enough return on equity. And more importantly, there's not enough certainty of results. They would rather somebody else created something, had a huge payday in a buyout, because they know it works and it has revenues. They'd rather pay that higher price. And that's something that is hard to accept until you've seen it over and over again. But anyway, let's keep going. Well, if it'll go up. So there's a return of travel television, but not exactly. The biggest aspect of the story, and I guess this is NextTrip's story, that many investors overlook, is Journey TV. Many people remember when dedicated travel programming played a major role in sparking future vacations and travel demand. Consumers would watch travel-focused television, become interested in destinations, and eventually book trips elsewhere. Management is seeking to modernize this concept for the streaming era. The difference is the journey, not the band, not dust in the wind. All we are. The worst song. And it became popular. No, it's Journey, Journy, is not intended as solely a content channel. The vision entails establishing a direct path from inspiration to transaction. In fact, Journey TV is producing a whole line of travel shows, production paid through sponsors. One of which, I guess, highly anticipated this summer is Tide. And it's anticipated to be a blockbuster with Chef Ben Robinson of Bravo center stage. Someone watching travel content, whether a Journey TV original or streamed content, can move from discovery to engagement to booking without ever leaving the couch. I mean, leaving the ecosystem, literally while watching the show. Next Trip's Agenic AI can customize a travel itinerary for the person watching the show, from local airport to hotels to excursions, all with the simple prompt by the viewer. That's actually sounds interesting. I hate planning travel. Trip has expanded distribution via multiple channels, including international, that's what I like, fast channels, video on demand platforms, and streaming distribution. The partnership with KC and the Sunshine Band, KC Global Media, and former Sony executive Andy Kaplan was especially notable to me. Kaplan has spent decades building and operating media businesses globally. That's pretty powerful. The involvement of executives with such backgrounds suggests that management's ambitions go beyond operating a traditional travel booking platform. Of note, Andy Kaplan has purchased shares on the open market on a couple of occasions over the past months, and it was filed in the SEC. With KC Global Media Asia and Oceanic viewership, Journey's reach has expanded into a region with significant long-term travel demand and growing streaming adoption. That's what, for me, I think one of the changes coming in our future is youth and economic power is moving to Southeast Asia, probably parts of Africa, and certainly into South America, if you include Mexico. The world is changing economically. India, too. So, adding to the Go USA European launch, Journey TV has a reach of over 250 million viewers, and it's growing to 300 million estimated in 27. So this compares to Amazon Prime, who has 315 million viewers worldwide today. Well, I pay for my Amazon Prime, but I watch on YouTube, so it's probably 314 million viewers, minus one. Anyway, although audience reach alone does not generate investor value, it does create strategic opportunities. It's a big audience. The question investors should ask is not how many viewers Journey reaches today, but how they can help Journey reach revenue. Ask not. The question is whether management can successfully monetize that audience through advertising, sponsorships, travel bookings, creator commerce, and affiliate relationships. That's interesting. I guess advertisers would pay for that audience. CEO Kirby recently made an interesting statement concerning Journey TV ad revenues. Quote, "We are not trying to compete with Giants Expedia and Booking Holdings. These companies spend $5 million a day in consumer customer acquisition. In fact, they are invited to advertise on Journey TV. Monthly slots are being future priced at upwards of $100,000 per advertiser monthly, with margins nearly 90%. They can have the booking. So I guess they're encouraging, they're not competing, they're cooperating. If management succeeds at this, the company's economic profile could quickly differ from its current state. Revenue growth leads to progress. Despite extensive discussion of strategy, quantitative results are ultimately paramount. The strongest argument in favor of the company is that recent revenue growth might imply, or does imply, management's initiatives are beginning to generate measurable results. According to fiscal 26 results, revenue increased to $3.7 million. That's in 26, and I guess that's so far in 26, representing substantial year-over-year growth. Fourth quarter revenue was reportedly the strongest quarter in company history. Investors should not extrapolate that growth into the future, but at the same time, this progress is difficult to overlook. Many microcap companies spend years discussing future opportunities without the company demonstrating meaningful commercial traction. NextTrip is advancing beyond the conceptual stage. The current challenge is to demonstrate that growth and demonstrate it can be sustained while improving margins and decreasing dependence on financing from companies like Lind. So we have to examine that. So why the Yada acquisition matters. The company's acquisition of a controlling interest in Yada may ultimately prove more significant than many investors assumed. Yada, yada, yada. At first glance, creator commerce and TikTok partnerships appear unrelated to travel. However, these elements correspond with the wider strategic vision. Travel discovery increasingly happens through social media platforms. I think that's right. And a lot of things happen on TikTok. If you ever punched a picture of puppy dogs, all of a sudden they show up on these little 30-second and 1-minute clips on YouTube. Everybody's attention is that small anymore. Consumers frequently discover destinations long before they ever visit a travel booking website. Yada gives NextTrip another way to participate in that discovery process. Should integration be successful, the acquisition could boost customer acquisition and create additional monetization opportunities through creator partnerships, affiliate commerce, and social engagement. It broadens the addressable market. So Russell inclusion, another development worth monitoring, is the company's anticipated inclusion in the Russell Microcap Index following the annual Russell reconstitution. It increases visibility, and it might increase buying among institutions and massive funds. I'll have to look into that. So for a company with a relatively small market capitalization, increased exposure can be significant. Chris doesn't view Russell's inclusion as an investment thesis all by its own sum, but it's a good favorable thing if it happens. That due date is June 26th, and funds have until the 30th to position. That's interesting. Of note, this is not optional. It is a mandatory buy-in if you're a passive fund, with estimates ranging from 600,000 to 1.1 million shares to be added to fund. Well, that's brilliant. Of course, it's limited, but that's a significant amount of stock, which becomes the bid. That's a brilliant thing to notice. I'll have to look into that. He says it has a low float. The valuation currently for Next Trip ranges from 30 million to 32 million based on preliminary fiscal 26 revenue of 3.7 million. The company trades at 8 to 9x trailing sales. So he believes current investors consider Next Trip as a traditional travel company. This valuation framework can change dramatically if management succeeds in developing a scalable media and commerce platform with multiple revenue streams. So Next Trip has brought in a seasoned, and it's always good when you bring in people that they're seasoned, preferably with Old Bay, but maybe it could be with a Texas barbecue. A seasoned all-star sales marketing team for Journey. So they anticipate hyper ad growth through global launch, which has recently commenced. And I'm reading that hyper ad growth is revenue, not spending. And of course, there are skeptics. Insiders and founders currently own 40% of the outstanding shares, and they're not in the float. And the CEO and the Cobb, chairman of the board, recently did short-term loans with the company, and the CEO put his own stock up as collateral in SEC filings. Of course, that doesn't guarantee future returns. Recent additions to the company include Brad Hilton of Hilton Enterprises. I wonder if he knows that other Hilton. And he's an advisor and technology. No, sorry, he's an advisor. They also brought on technology veteran Brad Buice of Hyatt Corporation as Chief Technology Officer. Those are significant. Of course, the biggest risk is execution. Management has assembled multiple assets, partnerships, and business lines. The current challenge is to demonstrate that they can put them all together and generate sustainable investor value. Profitability is building momentum. Revenue growth is encouraging, but investors will ultimately require evidence that this growth can translate into positive cash flow and sustainable margins. Yes, they're going to want to see material announcements, not puff pieces. And if you see it and revenues can be projected, that's a big change. But that's a risk that he highlights. And also dilution remains a concern. And I would think that people are concerned about Lynn's financing. And so the final thoughts. After 18 months as a shareholder, I remain a long-term investor because management is pursuing a differentiated strategy from traditional online travel agencies, which focus exclusively on bookings. Next Trip intends to integrate travel inspiration, content, media distribution, ad sales, creator commerce, AI-assisted planning, agented AI booking technology, and human travel services into a unified single ecosystem. The market is currently assigning a valuation of failure and is not extrapolating the huge value if management executes successfully. The next several quarters should yield a clearer answer. If management continues to convert business initiatives into calculable financial results, shareholder valuations will certainly change. I hope upward. I believe the company's intrinsic value is much greater than its current market value. Now, I think the price can also be showing concerns on financing, the need of financing, and then the fact that they took Lynn Partners. But I understand that insiders own 60% of the company. And these rich people, you know, I think Hilton and anyway, one of the reasons if you have 60% of the company and the stock price is down, one possible reason that you don't issue equity, you don't want to dilute shareholders, but you also don't want to create a situation where you're giving insiders who know things. Now, I don't know what they know, but if they know things, we've experienced this with Railtown, if they know things, they can't, I mean, technically, a private placement can have the ability to raise money, but if it's a significant amount of money and it really meaningfully changes percentages on the cap table, particularly as it relates to shareholders, it could encourage perhaps a shareholder lawsuit. Hey, you're giving these insiders stock at this price and you knew that? You didn't disclose it? So we'll have to find out about that. But that would imply that there's something to disclose. And I'm not aware of anything specifically. So, you know, I'm making an assumption. Let's finish it. In closing, Chris leaves a comment, recent comment from CEO Bill Kirby when asked by an investor. The investor asked, do you have patents on this funnel? Why can't Expedia or Booking Holdings do the same thing? Unquote. I summarize Mr. Kirby's answer roughly. No, we don't have a patent. And this, I love this answer. Patents get superseded. And if you put a patent out there, they can get copied. So then you got to fight it. But what we have built has taken over 6 years, tens of millions of investment capital, multiple acquisitions, dozens of commercial licensing deals, dozens of government regulatory and FCC approvals, which have taken 2 years to attain, and media global partners firmly in place. What we have is time spent and scale in trajectory mode. Companies worth tens to 100 billion tend not to build such a platform. They simply acquire them. And I agree with that. I've seen it over and over again. Obviously, a company could apply hundreds of billions, or not hundreds of billions, sorry, hundreds of millions, or $1 billion or 5 billion, and speed it up and make it happen. But if there's a solution there, why not just buy it and then put your corporate attention elsewhere? Because it's late, I'm going to end there on that next trip note, and I'm going to save. I don't think Chris is watching, but there's. I did ask AI what its response was to that, and there was some criticism. So I'll save that for tomorrow, and because I'm just a little too tired, and I really want to get ready for a meeting tomorrow. And $8:24. I've got a lot to think about, so I want to do that. Anyway, thank you for listening. I'm sorry I'm old and washed up and decrepit, but I'll keep going until the good Lord tells me not to. And what I love that all of you have built this community. I benefit from it as much as you do. And I guess I would just summarize it the way I have recently is as a group, we are behaving. Of course, there's a lot of us, but there's bickering. I've worked within it before. There's always back and forth, but in a fund or in an institution, we are analyzing the upside, analyzing the risks, and then getting probabilities in there. But we're doing it with various important metrics. And my view, and the one that I sort of stand by, is that you can invest for any reason in a slew of stocks. And if you do it like you're rolling the dice, I mean, your odds aren't very good. But you can argue, well, that stock's going to lose. That stock's going to lose. Oh, that stock's going to lose. Oh, that guy's washed up. Oh, that's awful. Everything's bad. Where do you go with that if it's always negative? I do believe that you have to assume every investment you're going into has a sieve below it, or has a trapdoor or a ejector seat, has some sort of nightmare, and you got to look for it. But at the same time, if you assume everything's bad, well, you might as well invest in the companies that have dramatic upside, so that if you're right, your return more than pays for what everyone else is BICTHing about, or BITCHing about. That's how you make money. And that's how a lot of people in life have made money. It's tricky in these low price stocks because you've got to find management that understands it or gets lucky, or is first, I guess. And there are some. And most of these companies, like if you're a resource company like Total Metals, when you have an opportunity to buy, you got to raise the money and buy. And if your financing is expensive, it's expensive. But it's what you do with it. Your next financing might be cheap. It's what you do with it. Finger Motion did a financing in December, which I didn't know about, but after I heard about it, and I still believed in that C2 contract, I kind of understood why they did it. But I was under the impression they were putting all that money, that's what I was told. I didn't make it up. It was going to go into the building the seat, the cars and the vehicles, and then it was going to generate revenue. That's not what happened. But if a company, for example, we just went through Chris's viewpoint on Next Trip, if a company takes a financing, and my understanding is that the Lynn financing, and I think we went through it a little bit, but my understanding is the Lynn financing document was modified quite a bit to allow for a clean exit. But that's an assumption. We have to check it. But if you, it's what you do with that money. And if we're at the point, as Chris was describing, I don't know the metric of monthly views. I don't know. I come from a time when everybody talked about eyeballs, and I used to glaze over because, okay, if I go to the supermarket, I might grab the Inquirer and read the article about, J-Lo hits a new low, but did that lead to revenue? So we have to look for revenue and all that. Railtown, I think, is trading. I really do think it's trading as if there's a bid. But let's leave more talking until tomorrow. I'm going to sign off with that at 8:30. Oh, there's a comment. It's probably Chris telling me to shut up. No, it's Steve saying thanks for all the hard work. I am trying to give us other things to talk about other than Railtown, because I really feel like Railtown, we got to get through August. So that's my intention. And I'm starting to talk about things I just told myself, only talk about Railtown because your audience won't get it. But I've talked Railtown to death. And I just think not only is there this blackout of news, there's vacations. So we just got to roll with the punches. T. Alex, thank you, William, and thank you to everyone contributing to our group. I agree. Thank you to everyone, and thank you, William, for blocking the negativity. I did block those two guys, and I am trying to not engage. I've engaged. Look, Lion of all trades used to come on, and I don't know if he remembers, but we went back and forth on some ideas, but I would, if I went into somebody else's audience, I would never trash the moderator of that audience. And of course, my reaction, he says he would have punched me in the face if he saw me. Well, maybe I don't know what to make of that. So maybe my words can be very strong going back. But I want it really clear, T. Alex. I don't want to compromise with that. I think we as a community, and we're getting a little bit bigger, I think we are learning how to treat the market. And if you compromise with kind of slogans and stay in the mire, you're not going to get out of the mire. So that's, come on, baby, light my fire. We couldn't get much higher. That was a philosopher. All right, I'm going to go. I'm going to say good night. Peace to everybody. See you on the morrow.